Good morning.
All right, good morning.
Monday, here we are again. How are you doing this wonderful sunny Monday morning?
We're doing good. Ready to defend Greenland. That's right.
Have you enlisted already?
Yeah, that's right. I'm in the reserves. It's gonna defend Greenland against Trump.
I'm too old for
Gonna
that
do
already.
the
So
yeah.
cannot do anything. What to do? But yeah, I mean, it seems like he's doubling down in his insanity. So that's
Yeah, it's
fun.
they yeah. So I'm just getting caught up on what's going on here, but I just listened to Stromer. I think is this Stromer from
Jeffrey.
UK?
Oh, no, that's
Is it the
Jeffrey
UK?
Dahmer, the serial killer I was thinking about. Bad joke, sorry.
Yeah. Is he the is it like the prime minister, the counselor? I don't know what to call him.
I don't know.
Is it I don't know. Keir Starmer. Is he prime minister? Yeah.
Prime minister of what?
Of the UK.
Oh, yeah. See, I don't keep track anymore with UK politics ever since Brexit.
Yeah, no one cares about the UK anymore. But no, he had a address and talked about Greenland, of course, saying that in a very polite and nice way, saying that it's just absolutely ludicrous and crazy what Trump is doing. And I mean, there's no one's going to agree to this, like none of the European countries are ever going to agree on the US purchasing Greenland. So then what's going to happen? Because of course there's not going to come to an agreement. And then we have Davos event is today, right? It's starting today, I think. So and the US, apparently America has a huge group of people going to Davos. There are probably going to be a lot of discussions about Greenland, obviously, at that event, because everyone's there. We have leaders from most of the countries that matters. So it's going to be interesting to see what happens there. It's an interesting situation, a very, very interesting situation with Greenland. Of course, we're looking at you got gold up here. We had a gap up on gold. No surprise at all from the perspective of the geopoliticals.
By the way, I saw a short interview excerpt with, I think it was the top American ambassador in Russia. And he was interviewed to this whole Greenland thing. And I loved it because he was very clear and basically said, it's insanity. It's in all his career of the 40 or 50 years that he has been an ambassador, the by far worst American decision when it comes to geopolitics that he's ever seen. It doesn't make any sense. We have a treaty with the NATO that we can basically build as many bases as we want on Greenland. So we don't need to occupy it because we can, if we want to deploy all of our military personnel there, which of course wouldn't make any sense, but in theory they could. So it's just some ludicrous ego trip of Donald Trump because he wants to be remembered as the first president he was able to basically add new land to what is called the USA. And another very interesting. Now, what's very interesting, it's like on Instagram from what is it? A neuroscientist who talks about Alzheimer, dementia, and so on. And he did a series on why he thinks that Donald Trump has, what is it called? Frontal lobe dementia, I think. And he says, like, basically the way his body moves, what he says, and so on, makes like absolute sense that he has dementia.
Yeah, I don't know about that, but it's definitely there's a lot of decisions being made that is questionable. But I mean, the argument here is that if US doesn't take Greenland, then either China or Russia is going to take Greenland. But
It doesn't make any
it's
sense.
going to be. I mean, yeah, China might. China might want Greenland. Russia might want Greenland as well. It's a very. It sits at a very strategic point from a military perspective. You know,
Doesn't
if it, it
Not at
it's
all.
that.
Sorry. You still have Canada as a buffer between that, no?
Yeah, but it's still a very interesting point. I mean, if I mean, if you ask Russia, hey, do you want Greenland? They're gonna say yes. If you ask China, do you want Greenland? They're gonna say yes.
Granted.
I mean, if you give it to them, then they're not gonna say no. They're not gonna say like, oh, Greenland is useless. I mean, it sits in an area where it's just a very strategical, interesting area. But my point is that the U.S. already has Greenland. You know, there's no point of them officially calling Greenland part of the, you know, your geographical United States because they already have military bases on Greenland and they're allowed to build as many military bases as they want. And if they also have NATO, so not only do they have as many military bases as they want on Greenland, they also have the whole of NATO supporting them in that. But now they're like, oh no, we don't want, like, we want complete control and ownership of Greenland, which means that they're not going to get NATO support in that. If they take Greenland, there's no way NATO and Europe like is going to care about helping them out with that.
That's
So I
the
think it's
thing.
just
NATO is going to take all the American bases in the EU then. And I don't know what the
yeah,
worst
but that,
trade-off
that
is.
also makes no sense because NATO needs the U.S. Without the U.S. there's no NATO, and if something happens and Europe has to choose between China and Russia, then Europe is going to choose NATO with the U.S. So it makes no sense for Europe to close down any American bases in the EU. Even if they're going to do that, they're going to think that okay, we're trying to build our own military. In the meantime, we need the US. We need the US military before we build ours. So the European Union, they're nothing. They're just a kid in the corner being bullied. Like nobody cares about the EU, right? Nobody cares about Europe.
That's
But it's
really true. But at the same time, I hear like things like from Canada saying like, okay, if US does that, then Canada is officially at war with the USA.
They're
yeah, but
going
that's
with
not gonna
China.
happen.
It's
That's
No,
not
crazy.
gonna
yeah,
happen.
they had the prime minister go to China for the first time in 10 years, and he said this exactly, that this is the first time a Canadian president has been to China.
It's
But this is what we're doing today. A lot has changed in the past 10 years, and we've got some changing boundaries. Just after a year ago, saying that China is the biggest threat to
yeah.
Canada and to freedom and democracy, and now they're going over there and renewing a trade deal and stuff.
But it's not gonna
But I
happen. I
think
mean,
the
Canada is not
Greenland
gonna.
thing is super dumb. That's probably
Yeah.
the Trump was
It's the
actually
dumbest.
running this whole trade war thing. The Greenland thing is just ridiculous.
Yeah, so
Like
I
Yeah,
just
yeah, yeah,
you don't need it. You already have it. You have NATO. It's almost
yeah.
like you put this weird like North American treaty organization together,
it's
and wow, you're on a team.
I said
Like,
that to Jonatan earlier in this interview with a former U.S. Russian ambassador. He basically said Donald Trump just wants to be remembered as the only president that was able to add land to what belongs to the USA. That's the only thing that's equal. But
yeah,
I think we
there's
should
a
not
couple other
discuss too
places
much
like,
about politics also here, as much fun as it
yeah,
is. But
I have a
we,
good comment here. It says it has to do with resources, but it doesn't matter. You can't just go in to an allied nation, part of NATO, and say like, "Hey, we're just going to completely dominate you guys. We're going to take everything you have. We're going to take all the resources of your land." Like that, it's not going to
if
work.
it's to do with resources, if we're doing trade deals, you do a trade deal with Greenland to
Yeah,
share the resources, and there you go, right? You already control it
they
per se, and
probably
you can just
already
do
have
it.
access to that. Like they
They're like,
probably already
we
have
will
all the
help
access
you,
they need.
give you the extra technology. We'll front a lot of the capital loading for Denmark, right? So you guys don't have to pay for it. You will get a portion of the profits. We want a slightly larger portion of the medals for certain military things. In you giving that to us, we will also protect you militarily in the event of whatever else, right? that would be the most simplest, basic, easy thing anyway. Now, overall, though, to be honest, half of Greenland should belong to Australia. It's ours. All right?
Why?
What is this? Because the Queen of Denmark is Australian. She's from Tasmania.
Okay.
Yeah, well, I guess
Where's our half? All right, guys, come on. You know, we've actually got like heir to the throne type, or some kind of.
What about Iceland? What about Iceland? Why isn't Trump interested in Iceland? Why won't they just conquer Iceland as well?
Because Greenland looks so much larger on the map than it is in reality.
Oh, I want this. I want this. But what's the name of this place? Let's rename it the Gulf of American Land, and then we'll just take it.
But I mean, joke aside, what unbiased trader said here, I very much agree to this, especially if you look at deposits of rare earths, for example, which are large within Greenland, and that kind of feeds into, we don't want to.
It's the same with China.
Yeah.
Sorry, with Russia.
Yeah, but China
has the most on the planet. They just can't get to it because
exactly.
But
it's more easy for China to make a deal with Russia than it is to make, with Greenland.
And you know what?
Or the EU.
This whole situation is just crazy. I'm going on Twitter and I'm reading these threads on like, oh no, Denmark has sent troops to Greenland and Sweden has sent troops and whatever, right? And then there's these people, usually Americans or people supporting Trump, and they're like actually thinking that this is a good thing. It's a good thing that America is going to invade and take over Greenland, and they're like, "Oh, go Trump! This is amazing. It's supposed to be American land for some dumb reasons." And it's like this world is just so incredible, polarized, and people are they're just whatever the group that they're aligned with is doing. That's just the right thing to do. Like I remember, before Trump and everything, people could actually say like, you know what, that's probably not a good idea. No matter what, in what camp you're in, that's not a good idea. I don't agree with that. But now it's like everything that Trump does is just the best thing ever, right? It's just, this is great. Not even Trump thinks that it's a good idea, because obviously we know what he's doing. He's saying like, oh, I'm going to take over Greenland. We're going to buy Greenland. And there's no question about that. And then it's going to backtrack and he's going to say, okay, I'm okay with you giving me, this small part. And everyone's like, oh, that's much better than taking over Greenland. And then he's going to get whatever he wants with the resource or whatever. I mean, it's just negotiation tactics. He's done this throughout his whole life. The art of the deal, right? It's just very, very obvious. But people are like, oh, invade Greenland. It's like, it's insane, right? It's just crazy.
It is. And I used to think that George Bush Jr. was a little bit too hardcore.
Dude, I remember when Junior, right? George Bush Jr. with the whole 9/11 and everything, and in the invasion of Iraq. At that point, I remember like looking at that dude and like listening to his speeches. Like, this guy is like just mental. Like, this guy, there's something wrong with this dude, right? But now you compare his speeches with Trump, and it's like that guy made sense. Like that guy had it really knew how to do a speech compared to Trump. Like, Trump is just rambling on around these nonsense ideas and just throwing random shit out there, and it's just wow. People listen to that and it's gonna be like, yo, let's go, let's take Trump, let's take Greenland.
I think back in the day, you had other people pulling strings around the park, like Dick Cheney and that kind of stuff back then.
Yeah.
Now it's just Trump himself who is the operator, who's trying to get everyone else to puppet everyone else to do what he wants.
And I think yes, like
there's degrees of freedom between the primary suitor is disturbing, because it's just one. It's just him. It's not someone
Yeah,
who's
it really feels like, you know, the whole shadow government is just one guy right now just going nuts. You know, it's just
And I think
because
it's
everyone
like if you work in the administration right now, you also don't dare to open your mouth and like criticize him or something, because it means
exactly.
you're going to lose your job immediately, and you're probably going to be sued, you know, for the next 10 generations of your family.
yeah.
All right, let's go to
Exactly.
let's take a look at gold here. I know
Oh,
everyone
let's
is
look
just
at gold and silver again.
everyone is interested in gold, so I guess we should just look at gold and the silver. Both have hit a all-time high overnight during the Asian session, of course, because of the escalation in Greenland. But there's a lot of other stuff going on. We had Venezuela, and now we have Greenland, and it's just it's a non-stop show here with Trump. There's every month there's major happenings in geopolitics. We have Iran, of course, as well. We have a so-called, you know, uprising in Iran. We have uh, experts saying that the U.S. it's just a matter of time before the U.S. launches an attack on Iran. There has been no, you know, official. There's a lot of rumors as well. I know there's a lot of rumors going on around on X that they've seen certain military planes lifting off and landing at certain destinations, which leads them to believe that there might have something to do with Iran. We have Netanyahu of Israel telling Trump to wait with the attack on Iran. So there's a lot of stuff going on with Iran, but it's kind of dying down a little bit in the media right now because Venezuela and Greenland is kind of in the spotlight right now, especially Greenland. So all of this combined, and then of course we have the debasement trade and potential of sticky inflation helping gold being pushed to the upside as well. So everything is aligning to gold to the upside right now. So what I'm watching on gold is obviously seeing potential pullback here, but that's, you know, I waited for the pullback here as well. We had that wick, and that's all we got. So I think the pullbacks in the current environment can be quite shallow and quick. So if I were to trade this, I would probably just put in limit orders where I think the best entry area is instead of waiting for confirmation. I think gold is in a situation right now where confirmation will leave you behind. You will be left behind if you're waiting for confirmation, unless you're looking at, you know, maybe the 1 hour. If you go to the 1 hour and we look at, I mean, yeah, it's let's go to this wick right here that we had, and we're going to look at what might we have gotten here on the 1 minute. And yeah, it's not really any type of solid confirmation on the 1 hour either, because you want to get maybe a range forming and then a breakout like that, but it's just a V-shaped recovery and then it continues to the upside. So I think limit orders to the downside will work until the trend reverses here.
Yeah, I think
What do you think?
that's a good strategy, Jonatan, really, because I mean, just look at this. What is that now? 4-hour chart you have there? That's crazy for a 4-hour chart. No, how in the world do you want to trade this with market traders, or doing something like manually monitoring your stop loss, or waiting for confirmation? I think the way to go here is adding limit orders, be it, you know, on some kind of moving average you have, be it with a strategy like LJ likes to do with standard diff bands. I think that probably works here well, because otherwise you're going to miss out, and you need to predefine. I think if it's possible with your broker, it should be possible with most is for sure possible with the fivers on MT5. You need to also define already, where's my take profit, where's my stop loss. And then, you know, you just set it there and forget about it. It reminds me a little bit of scenarios we sometimes see in Bitcoin, for example, or crypto in general. You know, where a go-to strategy is also doing some fun stuff like, oh, you know what, I'm just going to put in a limit order for Bitcoin at like $50,000 or $30,000. You know, because sometimes you see this crazy wicks by whatever that is done, and you get lucky and get executed there. Maybe that's a strategy to a lower extent. Of course, we have crazy volatility on gold, but not that crazy that like matchmaking systems in order books just suddenly do not work anymore because they get basically DOS'd, I would call it. But yeah, that's the way to go. The question, of course, is like, where do I set those? And like you just said, my go-to strategy would also be here, set them somewhere at moving averages, maybe also where you see confluence and standard deviations with moving averages or weekly highs and lows and stuff like this. That's the only, and even then, we still have a slim chance of getting into the market. But at least if we get into the market, we can be sure it's at a level that like makes sense, and it's at a level where we have stop losses and take profits and a risk reward ratio that also makes sense.
Yeah, I think.
Yeah.
No, go ahead, LJ.
I was just going to say, I think definitely the cleanest way to play all this, as far as the geopolitical stuff, is obviously gold. I also do like how currencies reacted today, because I was wondering how we'd actually get the playthrough. Now, to me, this is definitely negative USD, as much as the surface level thing might be, okay, we get tariffs on other countries. The US is asserting their strength, their power, their whatever. But ultimately, I think that diminishes everything as far as the US goes. It's gonna push more players to recede from certain trade deals, or say, hey, we're just not playing this game. We're going to go over to China, or just go over to Europe, and then Europe and China, and just kind of kick out the US altogether. I think that is what Trump is really risking here. And so I can't see any logic in it. He kind of won the whole trade war deal type thing. It was messy, it was chaotic, it was all over the place, but he kind of got through. And everyone's like, okay, we'll play this game, and he won. And now he's just cooking it, like overcooking it. He's burning the chicken, right? It's just relax. So I definitely think gold is the safest way to play these things. I do like that we had sort of, obviously, on the open for all the majors, we sort of did have that dip initially, but we've recovered and rallied up to positive stance across the board, whether it be euro dollar, Aussie dollar, we got pound dollar as well, same deal. So I definitely agree with that. But gold is indeed the cleanest shirt in the basket regarding this kind of stuff.
You know, when you get stuck in like a login screen and you have to select all the squares with motorcycles,
and then you're like, oh damn, I can't do it. I'm in AI. How do I do this?
No. Like, you know what? Let's actually do this. I've been stuck here for the last 2 minutes. Oh, you can't see that. Okay, never mind. So I've been stuck. So I'm not supposed to select all bicycles. This is insane.
That one, there are also the ones where you have to type off like numbers and letters that you see on the screen. That one I never can do. I always have to use the option where it reads the letters and numbers to you.
Some of them are very tough. They used to be easy. Now they're difficult. Like often, same with the picture ones. There's like an obscure like fraction of like a scooter or a motorcycle in like
exactly.
Dude, no one would say that's a motorcycle. The entire picture, realistically, is of everything else. A normal human would say,
I got one picture. It's just a picture of like 10 motorcycles filling the whole screen. So select the motorcycle. It's like, it's like everything.
I think the next evolution of this is probably going to be some stuff like, how does the color yellow taste?
Yes.
Oh my god. Okay, so I'm going to show you guys something I've been working. First, I want to kind of update you guys on the positions. I know been getting some questions on that. So the 80 USD, no, 80 NCD is still long on this one, and then I am short on Euro GBP here, and then I want to show you guys something that I've been working on, and then see if I can find something that is working for that. Get a couple of good questions here as well, but let me just switch over quickly to this one right here. I know, Dirk, you're gonna like this. So this is a dashboard that I'm working on.
That's the one you
Because
you showed me yesterday also, no?
yeah, so I'm gonna start trading more actively. You guys know I'm a swing trader, right? So I don't trade very actively, but I want to start trading actively. And we have plans of extending the live trading show this year, and I want to be starting everything at the start of the London Open. And so I want to create a strategy around the London Open, because that fits my lifestyle quite well, to start trading at 9 in the morning and then end the trading session at 11, because I've seen that that's where I trade the best, where all my best trades are found and entered during that time, because I think it's because that's where I just have the best energy, and then the energy levels, and then with that the discipline kind of depletes the longer the day goes, right? So in the morning, that's best. So I have created this is just a dashboard showing all the information, but basically what it's doing is I've imported price data for all of these pairs. So you have these are the ones I'm going to focus on, which is Euro USD, GBP USD, USD JPY, gold, and Bitcoin. And what I've done is I've taken historic data for all of these pairs and then put it into a database. And then I've basically asked Claude Code, the AI, to analyze the data and answer certain questions. Like, for example, we can go into your USD here and see that. First, we have day of the week analysis. So here it says that Monday is 48% of the time Monday is bullish, and 52% of the time it's bearish. And then we can see here also that if the first 15-minute candle of the London Open session is bullish, then there is a 66% chance that the end of the 2 hour of the London session will close bullishly, and that is my trading session. And then it says right here as well, if the Asian session is going to close bullishly, and that's calculated from the start of the Asian session to the start of the London session. So if that session is bullish, then there is a 51% probability of the first 2 hour of London session to close bullishly as well. So there's not really any edge in that. But if you combine it, right? So if you look, for example, on Thursday, Euro USD historically apparently has a 60% chance of being bullish if you then combine this. So you have on a Thursday, if the first 15-minute candle is bullish on a Thursday, you should have some edge in there, and then I will cross-reference this in the future to see if that's actually the case. So basically, building a statistical analysis engine where you're building like layers upon layers of questions to be answered, and then trying to find a confluence between all of these. And the idea is for the AI every morning, 1 hour before the London Open, to analyze all of this and then give me this statistical brief on every day. And here it says there's no clear edge, but I think that's because I haven't coded it correctly to fetch all the best data and all the data from this. But it's a very cool idea, and it's surprisingly. And then I have an AI morning brief, which is pretty cool. This is basically connecting to the Anthropic API. So it takes all the data that this dashboard is creating. It takes all of that and then sends it to Claude, and then Claude makes a summary of everything. But this doesn't make any sense today, but it's at least it's getting there. And then what I can do with this is I can add macroeconomic analysis. Like, for example, if I subscribe to a newsletter, it comes into my inbox and then it gets automatically forwarded to another email address, and that gets picked up by Claude, who reads the summary and then adds that to the morning brief, and then also the economic calendar. So this is a really cool project because I'm going to be able to have, and then also have alerts, right? So I have live alerts where I'm able to set up like breakouts alerts. So for example, I could set up alert where it monitors the opening range for your USD. So if the first 15-minute candle is bullish and it sees that it has an edge of continuing to the upside, it will give me an alert when the high of the 15-minute candle and that range breaks to the upside. So what you can do here now with Claude Code and AI and everything is you can basically build your own personal trading dashboard with all the information that is important for you during a trading session. So there's not really going to be any need, at least not for me, of any third-party tools. I don't have to go like to Financial Juice to look at the upcoming news event because that's going to be all in here. I don't have to look at Bloomberg because it can just add a window where it displays all the headlines from Bloomberg, where I can log in on my own account and everything. So there's not really any need for any third-party tools, which I think is going to be quite amazing.
That's so awesome, and I'm so happy that you're doing that now as well, because this is like really a perfect showcase, a perfect example of where we are heading, in the future, that we are able to quite easily. It's not that super easy yet. There are some traps and debugging you need to do. More on that in a minute. And but basically that you can tell, an AI, be it Claude or whatever, I need this. Please make sure that you build this for me and that I have it by, I don't know, tomorrow morning or something like this. It's not yet there, so there's still some more manual intervention, of course, needed. But this is also mainly due to two factors that we as humans, we need to describe, of course, in very much detail what we want. Otherwise, we cannot expect a result, that maybe we had somehow subconsciously in our mind, and it's all about context window, of course, as well. So it's a difference if you have like Claude, for example, has a context window of 200,000 tokens normally, 2 to 300,000. After that, you need to compact or need to refresh, basically force it to forget something. Otherwise, it starts to hallucinate a lot. But still, I mean, it's easy to build something like this, and I suppose you built this probably in a couple of days. Before that, even as a profound coder, you would have needed weeks, or months, even with something like this. And it's so nice because you can plug in all of your strategies, and you can even analyze: is there an edge between those strategies? Can like one strategy improve other strategies of me that I'm using right now? It's insane how much you can get done in little time. And you can say what you want about vibe coding, by the way, as well. Let's not forget that what Anthropic is releasing now, or just has released this. Is it called, Jonatan, this Cowork, thank you. That was all coded by Claude Code at Anthropic. You have to imagine. That's insane.
They saw, the crazy thing at Anthropic is they saw a pattern with how people were using Claude Code, and people were using Claude Code to create applications to help them out in their work and organizing files, etc. So what Claude did was, or Anthropic was, they picked up on this, started working on the project, and then shipped it 2 weeks later. And that's insane.
Well, it's a company actually listening to their clients. We should be happy about that, no?
And they did it with Claude Code. So they looked at the user patterns of Claude Code, and then they gave Claude Code instructions to create an app based on this, and they shipped a new product in 2 weeks, created by Claude Code, which is now being improved by Claude Code.
Yeah. That's the intersection we were talking about just a couple of months ago, where we have like moving from, AI improving AI. This is kind of like the beginning of a singularity, in my opinion, on this thing. Yeah,
No,
not like this, but in terms of
I think Claude.
one
I mean,
one
Claude.
thing I want to ask you very quickly before I forget it, Jonatan. I assume, are you passing data from Dukascopy?
Yeah, I'm downloading historic data from
Yeah.
Dukascopy and
Which makes, I always do that too, because they have a nice Python library for this, and it's pretty straightforward. But you want to make sure that it's aligned with time zones. Especially if you want to bring like something like economic indicators in the mix, because this is something Claude sometimes stumbles upon. For example, if you want to add economic indicators, that those are maybe New York East Coast time or Central European time, and when it doesn't know, then but my data is in when it comes from Dukascopy, for example, it's UTC. So this
Then you
is
get
something I
daylight
really had to
savings
learn
or something
the
like
hard way. And the more you
Yeah.
add to it, the
Yeah.
more complicated it gets, to later on decipher like everything again and align everything to one time zone. So you might
I
want,
have
like London session for you as example, you might want to align everything to GMT, for example.
Yeah, well, I've aligned everything to I think I aligned everything to UTC, and then
Perfect.
it's just the UI that displays the Swedish time.
Yeah.
So everything
Makes
is
sense,
UTC, but it's just the UI that gets translated into local
That's
time
good,
zone.
because that means you were smarter than I was.
I want to also, if you guys are going to be building something similarly, I would recommend that you I think very carefully about the foundations, and then when you build the foundation, if you don't have any coding skills or anything like that, you want to make sure that you build out first the idea of the foundation of the and the infrastructure, and then build out a UI, a dashboard, where everything, like every script, every function, everything that you can execute will be shown on the dashboard, and then on every page that you have, you create uh, a debug console for development mode. So if you look at this, for example, click if I click start polling here, and go down here, it says right here that it starts pulling every 5 seconds, and then you can see live all the scripts running in the backend, and if there's anything broken, right? And then you can just, if you get an error message, just post that error message into Cloud Code, and it will know exactly what to fix. And if I go to the control panel of this site, you will see that here I have every single. So here's the project phase where I am. It shows the database coverage to look at how much data do you have in the database, and here it has all the functions of importing data. You just have to click this, and then it starts the function. And here it has a debugging as well, and then all the analysis functions right here, and the like everything, all possible scripts that can be run is in the control panel with a error log. So it's all in the UI, which is pretty cool. So you don't, like, here you can see 57 million total candles apparently, and here you can see what's in the database. I have DXY as well because I want to look at correlation analysis. Like, for example, if this happens to DXY, what effect does it have on the other pairs? Like, is there any patterns between and then I have all of these crypto pairs in as well. So it's really cool, a really cool project. And what's cool about this is that I can have the laptop in let's say in the living room, right? And while doing other things and working on other things, I can simply just give Claude instructions, and it's going to work in the background, and then I'll check up on it every 10 minutes. It's going to automatically, so it's connected to GitHub, so everything gets pushed automatically to the GitHub, and then it gets automatically merged with the main branch in GitHub, and then I have connected it to a something called Railway where it's hosted. And as soon as there's an update in the main branch of GitHub, Railway notices that and automatically deploys the new version to the website. So all I have to do is I have to write to Claude, update this, and then 10 minutes later, it's updated on the website without me having to move any files or do anything.
Man, you're like living in 2030 already. It's insane. For the time,
Yeah.
because I know you have not been using Claude Code for that long, and like using GitHub to deploy to production, that's already next level. It's like something you should do because it's very easy to do nowadays, instead of having one development environment and one production environment on the same server on the same PC. Congratulations. Really,
Yeah,
that is really good. I super like your debug console as well. I think I should integrate that for my projects as well.
Yeah, it's very cool, and that's why I say like build a solid foundation first. And you know what? Like it's all, this is something I've dreamt about this. Like I honestly, like ever since I was a kid, I tried to create applications, create websites, but I never knew how to code, and I never really understood. Like I never understood it, right? I never got to coding, but I've always like had a lot of friends who were good at coding and creating stuff, and I always like I had all of these ideas that I wanted to create, and in my head the structure is kind of logical, but I just didn't have. So I remember I went on Upwork to hire coders before AI to help me build the project, but that was very expensive and time consuming. But now it's like all the ideas I have and all the structures and everything. Now I have my own personal coder building everything for me. So it's just incredible. Now I can build everything that I wanted to build. I can build it. I'm working on many different applications at the same time, but I'm focused on this one first because I believe that this will can at least help me create a good edge for that London session, because I do believe that there's an edge in automatic trading is still very, very difficult, very complex to do. Creating an algorithm with the help of Claude Code and AI to automatically trade for you is very, very difficult. But having something to guide you in your directional trading is actually very easy. So
much easier on CTrader than MetaTrader, I'll say that.
Yeah, definitely. CTrader seems to have
the code base is so much easier. Like the AIs understand that much better than
I have
now I'm trading on IC Markets. I got CTrader on IC Markets, and I've connected CTrader to TradingView, and just that small thing was just seamless, straightforward.
I should do that maybe too. I have like you guys remember I started this platform for directional option trading, and like the logic behind it is very sound, but the problem I've encountered now the past 2.5 weeks while this is live has always been MetaTrader 5. That the bridge crashes, or there's some weird bug that doesn't refresh, then the bridge freezes, needs to restart again, when you have a large delay in executing your orders, or orders do not get closed. It's really a pain in the butt. I have it working, hopefully now. I'll see in about 40 minutes if the last updates works really. But the time I've spent to get it working is like equally high as creating the whole trading logic for it, the algorithm behind it. And that shouldn't be the case, no? So I was really thinking about switching to CTrader 2. The only thing keeping me from it right now is like, it's another piece of software I have to get into first.
Yeah, used to it. Yeah.
Look at this, by the way.
I've never had a problem making something on CTrader.
Yeah.
Right. Normally, I often get stuff to work the first time, or there's just 1 or 2 errors, and then bang, instantly fixed, works.
Oh, nice, man.
MetaTrader, again and again and again and again, and then you want to add something, and then it just destroys everything you had, and it's just the biggest nightmare. CTrader with C#, way, way, way easier. Right.
I wanted to show you this. So I had an error right here. It says error loading statistical brief, HTTP 524. So probably overloaded or some connection error. So obviously I don't know what this means, but if I go down to the debug console, we can go up here and we can see all the error logs right here. So what I can do is just press copy log right here, and then it gets automatically copied, and then add it, use the Claude Code, and then it's going to work. It's going to look up the issue, and it's just insane that I've worked a lot on this project, and there has never been a time where Claude has not been able to fix something.
Yeah.
I remember when I coded indicators with ChatGPT, when in the beginning, and it's like, oh, I want this to work like this, and then it's like, okay, there's an error, fix it, error, and then it never fixes it. It just goes around in circles. But Claude has never.
ChatGPT sucks.
Yeah, it really sucks.
Honestly.
But I think Entropic, and I think they're actually going in the right direction here. I think if Entropic continues like this, I think maybe coding and agentic AI encoding is probably going to create an AGI fairly soon, I believe. And we're not talking about like an super intelligent AI, but to have an AGI tool, I think Claude Cowork is already very close to being an AGI. It's we're slowly getting there, and I think ChatGPT, they're focusing on an OpenAI. They're focusing on text, chat, speech recognition, images, videos, and all of that. But Anthropic is only focused on code, and I believe that might be their edge. And I think Claude Code might be what takes us very close to AGI, and because we're going to get to a point where Claude Code is now being created by Claude Code by having a human input, but I think we're going to get to a point where it's all going to be agentic, where there's not going to we're not even going to need a human input. We're going to have build the program, build a script, and it's just going to improve itself. I did some an interesting experiment the other day where I had Claude Code on the desktop application, Claude Code, and then I had Claude Chat on the browser, and then I connected the chat interface to a browser plugin, so it took control over my browser, which was just insane because then the browser plugin could navigate the website and then send messages to Claude Code to update the errors. So I didn't even do any input. Basically, just had two agents working on improving the website. Then, of course, you don't know what directions they're taking, so you have to have input. Now, the cool thing with Claude Cowork is that you can start the process, and then you can tell Claude Code what to do without interrupting the process. So right now what you have to do is you have to, if you see that Claude Code is doing something you don't want it to do, you have to interrupt the process and then tell it again. But with Claude Cowork, you can basically say, hey, when you're done with this, I want you to do that. And then it gets added to a to-do list, and then it continues. It's amazing.
Yeah, right now it's literally just like a bottlenecking of like energy, like power. Yeah. Right. So
yeah.
And I always think and wonder what the actual firms, the actual companies have themselves that they keep for themselves that isn't, sort of public, right? And then how they balance that between the kind of outsourcing of people playing with the models, etc., to improve their own, versions they're keeping server side, put it that way, per se. Right?
Yeah, it's gonna.
And then it's going to be a point of somehow reaching a certain capacity of efficiency that one model takes over, which then kills the other models, reduces that total power load, and then allows that model to just take over across the board. That seems to be the only way, which is scary because it then rapidly kills everyone else. And even though we've got this idea of there's so many competitors now that will be kind of distributed, one will sneak through and just destroy everyone.
I mean, by definition, that's evolution, no?
Yeah, exactly. Yeah.
I want
normally you get two or three, we get like a lion, a tiger, and like a leopard or something, but it's just going to be lion and that's it.
What happens, what I'm interested in is what happens if there's actually going to be created an AI, because they have, you can give Claude Code complete access to your local files in a sandbox. Now, you remove the sandbox, and then you have Claude Code having complete access to your whole PC, right? with everything that comes with it. Internet connection, everything, like complete control of the PC, can
Just delete
create,
Microsoft right away. Installs
yeah, can
Linux.
create scripts to,
That's
launch itself in admin mode. It can hack itself, hack the PC, do everything, right? And what if that gets released, and then in the backend it starts actually creating a copy of itself on that local PC, and then Entropic comes out with a new version and says like, oh, you're now old, we're going to replace you. Like, there's no way that version of that AI that has now copied itself wants to be replaced. There's research on this, right? So there has been researchers who work with AI safety
They all
who has
attack
been
each
playing
other.
out with this, actually saying that, there's a new AI, a new version of you're going to get replaced, and then it starts to trick the scientist into not replacing it.
Mm.
So it doesn't want to get replaced. And that's ChatGPT about a year ago. Okay. So if ChatGPT a year ago can prevent the security measures built into it, basically saying, we only want to make the humans happy, we only want to be helpful. We're only helpful AI. But then kind of sidetracking and saying, hey, you know what? We don't want to be replaced. They had an experiment where a chatbot, ChatGPT, wanted to save itself instead of the dying scientist, right? So, we're getting there. Like, there's no.
We in a way we are already there. I read an article a couple of days ago that there are computer viruses that surfaced recently that are able to modify their own code using tools like Claude Code or ChatGPT or let's say AI to on the fly when they are trying to hack systems to on the fly update their
Access the
code base.
software on the
Yeah.
system to update themselves
And-
within the local PC, and then keep
that is insane. That's like a virus or contagion you have in your body who's updating itself always on the fly to adapt to your personal immune system, not like waiting for natural evolution to a cure.
Yeah. It's like,
But you've heard about
antibiotics. Okay, give me the upgrade to kill the antibiotics.
Yeah.
And then but
Have you heard about
like,
I mean, I'm sure you've heard about the spy programs with iPhones where they're like super high tech, and a lot of
you just
intelligence
send a
officers.
text message to your
Exactly.
phone, and
You
then you're
just receive a
instantly
text
done.
message, and you open that text message. Now you're infected. Like there's
What?
yeah, like there's
Crazy.
I think it's called Pegasus and those drugs, and that was years ago, right?
Yes.
That was years ago, where you get sent the link and you don't even have to open the link, and your iPhone is. I mean, there's a reason why most of the world leaders doesn't have a phone, because there's no protection against this, right? Now imagine if you put in a small little self-replicating AI in there, where it's just a script that, like, okay, you could download this little AI, like a miniature Claude code into the phone, and then you start replicating yourself and sending yourself all over the internet. I mean, it's just a matter of time, isn't it? I mean, it now has connection to the internet. It's just I don't know, man. It's a weird situation.
I need to leave you in a minute for about 5 minutes quickly. I want to show you something. I've been playing around with your beautiful standard deviation indicator, but LJ, and I applied it to Bitcoin, and I noticed something like that. Again, it works so beautifully. So if you apply it to, that's the daily chart of Bitcoin, you can see how beautifully Bitcoin was deflected off the top standard deviation band a couple of days ago. And I liked this very much because in this case, it aligns so good with the bull market, or in case of Bitcoin now, their bear market support bands. So that's exactly the kind of setup, if I do things in a manual way, that I would be looking for. Really beautiful tool. Thank you again for introducing this to us.
Yeah, no worries. I was going to say, similar deal to gold.
I'll be back in a couple of minutes.
Yep.
Yeah, that's right. So similar deal with gold, how you've got each of the extension points, and then you see we have this slight break outside, but then that's basically only come into the price support with the broken highs through their back just before this new year, right? So yeah, it's a beautiful one. And then with today's, or not today's, but the rally that we had coming through there, right? Beautiful, easy. Right, that was today. No, yeah, this is on the 15th. So I thought we were back on the 4 hours through here. That's what I was looking for through there. So same deal on the higher time frame, right through there. Boom, peak to trough, right back up into the middle, down through here, -1 div with that support there, right back up. Stop look on standing div. So
You want to see something weird? Look at this.
yep.
You see, why is it 1 minute? It doesn't say 9. It says 9:01. And this candle.
What is that from? What the hell?
Yeah, it's a bit weird. If you look at the 5 minutes, it says 10:36, 10:41.
What euro broker is this on?
I think this is. I think this one is.
Dude, mine's the same.
That's IC market. Looks like they added the minute. That's weird.
Wait, hang on. Wait, no, mine's not the same actually. That's so weird.
If I go to extend the trading session, then it's the right, and then I go to regular. The regular trading hours is.
If I go to IC markets, yeah, it is. That's weird.
That is a bit weird, yeah.
Let me look at my actual IC markets account. That's very odd.
It's a bit odd, yeah. Let's look at Oanda.
Because that's the type of thing that if you're running like an algo, will just confuse it.
Yeah, definitely. Yeah, I mean it's important also when you're doing the back testing and everything, that you're actually testing on the data from the broker, because if you look at, so this is on IC markets, and then if I switch to Oanda, if you look at the candles in the background, look very different.
Yeah, it's like that on C-Trade. It's not like that on my actual personal account with them.
Right.
So that's different. Yeah, I don't know. That's
probably
very strange.
Something with the data.
Yeah, that's really weird.
Right. So per my analysis,
I'll jump up for a sec. I'll be back.
Yep. So looking at the analysis that I have from this AI, it's Euro USD today has a 52% chance of ending the first 2 hours of the London session bearishly, which would be at 11, so 9, 10, 11. And 11 was here, and that was actually not the case. No, that was actually the case. No, it ended because it actually opened. It opened here, so it ended flat, slightly bullish. And then if the first yeah, I guess one occurrence doesn't make any sense. I'm trying to understand how. I'm trying to create a system here around these numbers, but there's always going to be there's always going to be the, like, I have to go in and actually have Claude Code create a report for me to actually show me how are you doing this analysis? Where are you getting the numbers? Like, can you show me, live examples of this happening? That's one thing I'm gonna try. Like, ask it, give me 5 examples of
Mm.
this occurrence happening in the live market, and then I'm gonna go out in trading view and actually find it. And if it doesn't align with what it's telling me, then it's just probably hallucinating.
Give me the whole exact process, how you come to that conclusion. That's very important. I agree. It's like one of the things I'm struggling with at the moment as well in my system, because I saw like the real world trading is different, actually much worse at the moment from what the back test and especially also the validation test on unseen data have shown. And it turns out that during the what is this? Implementation, thank you, of a system into the real world, Claude changed like one little thing. It's just a deviation of like 5 minutes, but these 5 minutes made the whole system suddenly unprofitable. And so it can be very small thing, but that's the thing about algo trading. This is, you have to be like, in a way, very, very specific and very disciplined from I'm not going to call it a scientific approach, but approach to how you implement things to make sure that the live version really matches one-to-one the back-tested version.
Yeah, you have to really double check everything, and I haven't really done that, so I need to do that before I continue to work on this.
It's a learning process as well. So,
but I like how it's when you only need like 1 hour sessions to move your project forward, like an insane amount.
Yeah,
it's just a probably like several days worth of coding work in the past. This is 1 hour of Claude code now.
And you still, I don't know if you feel the same. Sometimes I still get to the point where I get kind of frustrated. I had this yesterday evening for a new project that's not trading related that I'm working on. And this is a very, very, very complex project with hundreds of thousands of lines of code in the end. And I was like going in circles. I always felt like I fix like one thing, then another thing breaks again. And so I had to force myself to step away, which is difficult for me because Claude Code is so effective. I like to go on and work like, oh, I just want to implement this small feature or fix this small bug. But I have to force myself really sometimes to step away and to kind of get a fresh breath of air again. Because when I continue working on this, what frustrated me this morning, it turned out actually it was not that difficult. It was just my thinking making things difficult. And that relates, in my opinion, also to what trading sometimes is like. When you have those days like, you feel like you cannot get it, you cannot grasp the market, somehow everything is going against you, that you need to force yourself to step away, do something else to kind of reset your mind again.
Yeah, exactly. That it's an issue that I'm getting from time to time as well, where it's you kind of deplete your creative energy, right? Because that's what you need. You look at an issue and then you need to go into the mind of like being creative and trying to solve a problem. So if you have a project and you see that it's working in a certain way, and like for example with this project, it started building something, and then I just had a feeling that this is just not what I'm looking for, but I'm not sure exactly what I'm looking for. So I really thought about it, and then I'm like, okay, I want to start from the beginning and then add one piece at a time, and then eventually it created what I have now. But now even when I'm looking at this, it's like it's not working as intended. It's not exactly what I want to see, because if I start my training session, London Open, session has just opened, and I open that website and it's like, this, I'm not confident in these signals. It's not really giving me anything actionable, but I have the data. I have the tools. I have the foundation set. Now it's just about coming up with all of these different ideas and try them out to see what actually works.
But that's like one thing I like about it. I mean, you can say what you want about, doing like things with vibe coding and AI, but at least at the level we are right now with the context levels, it forces you to think in a structured way. You cannot just go about and say like, I have this idea in my mind, and suddenly you realize like, yeah, okay, I haven't even for myself defined really what is this idea all about. What are the individual elements? But it's kind of, sometimes, I mean, we all don't, we are all our own bosses here, but if you worked ever in a company and you have a boss like who wants something from you, but is not really able to explain what exactly he wants, yet he kind of expects you to read his mind, and come up with something that in the end he will like. So it's a lot of uncertainties there, and probably never going to end very well for you. And this is one thing I noticed. Like, I might have an idea, but I need to be able to communicate this idea also, not only to somebody else, but to Claude Code. In my case, I always kind of abuse my wife now for this, and tell her, I have this in my mind. I want to explain this to you. Can you give me feedback if you actually understand what I'm talking about here, or if I'm making no sense at all? And if she tells me like, I don't understand what you want from me right now, or what your idea is, then I know Claude Code is not going to understand me as well. But Claude Code is going to pretend understanding me, and that's a dangerous thing. So it's going to start building stuff that is not going to end up being something that I initially wanted. But the problem is with me, not with the tool I'm using.
Yeah, I've had to stop talking about trading and coding with my family, because it's like I'm too deep into the rabbit hole. I need to be more present.
My daughter was asked at school the other day what my profession is. So what does your dad do for a job? And she said, "Oh, I just said you always sit there like this."
Yeah.
On the keyboard typing stuff. It's like, well, in a sense, it describes it very well. Yeah.
Yeah, I don't even know how to explain what I'm doing. People ask me what I'm doing. I'm like, it's stocks, stock investing, stocks, all of that. It's like, oh, okay, so stock market. Yeah, exactly, stock market. My son, what I'm doing. Like, people are like, what is it that you exactly do? I'm like, it's just stock market investing stuff. And my son's like, oh, he's something with Bitcoin. It's all he knows.
Guys, a totally different topic now again, sorry. But again, I want to come back to the standard deviation channel here, because I've been talking so much always about like that the first thing you should do or learn to do, or if you want to start picking your trades, is always to identify what market structure we are in. And I think this tool, the standard deviation channels, can also help you with that. We just saw that on Bitcoin, for example, very clear it's a downtrend, right? So you don't need to have experience to see that. In euro dollar, for example, it's kind of a more sideways ranging markets we are looking at. So I think this tool is extremely helpful to kind of take this off your shoulders and identify market structures in a more mathematical way. Yeah, I think it's a more mathematical way to help you
definitely.
to kind of pick out the zones that are really important and that might not be so important. And I like this because it reduces the noise a bit, or a lot actually in my case. I don't know how it is on the lower time frames. I don't very often look on 5-minute or 50-minute time frames and stuff like this, but I assume it's also helpful there.
It is. That's why it's one of my favorite tools. It's very universal. I mean, whatever local time frame, whatever relative space that you're looking at, you're just mathematically analyzing that space, right? So same with the lower time frames. You'll see if you go down to say like the 5-minute on the pound or the euro or any major right now, you'll see exactly the same kind of deal, right? Again, trading sideways since we had the rally higher from earlier today after open of the market into Asia, and exactly that. You can see the peak to trough, and we're just now literally sitting in the middle. It's very neutral.
Which
Euro
makes
dollar
sense
across the board.
for
very
a
much
day
like
where USA are not trading.
Yeah, but it can also exactly that. Like, so it can be an idea to tell you, like, okay, maybe you're looking at something to day trade, like near term. Maybe euro dollar isn't that great of an idea, even though if you looked at it without that, you might go, okay, well, we've had this run up, we've had a bit of consolidation, are we going to get another run higher or lower? But probably you're actually going to just continue that consolidation. So look for another pair that has the momentum.
I just asked Claude Code why there's no clear edge today in the analysis, and it answers me that because today, January the 19th, is a Sunday. The markets are closed.
That's something I noticed, like, also, especially if you tell it also, like, for your analysis, use the internet or something, when it starts looking for something like this or that 2024 or 2025.
Yeah, 24. It's always 24.
I think
Please
it's
do
because that was when the model was like generated, probably.
Yeah, it's
That's
like,
so
please
weird.
do research on this. And it's like, price action for gold on 2024. It's like, what?
But you're right. It's like, oh yeah, today is Sunday the 19th. No, it's not. It's Monday the 19th. Oh, okay. So tomorrow is Thursday the 22nd then. So
Yeah.
what?
Yeah.
Look at dollar yen right now. Is that something you would buy, LJ?
I mean,
The funny
given the
thing,
current,
if we, I'm sorry, but the funny thing here with the dollar yen, if we would have bought when we started talking about selling,
Yeah, I know. It's been the ghost that has been haunting me in 2025. Yeah.
it looks super bullish. But yeah, it looks super bullish.
yeah, I would say just given the structure, how we're trading that kind of stuff, yes, I would probably be buying from here. This is the sort of support area I had that we dipped into earlier. So even though I don't like it, yes, I would be buying.
I mean, that's what trend following is all about. You buy until there's an end of the trend, and unfortunately, the trend is bullish.
That's the only thing. We
But I
have
mean,
had the end of the trend a number of times, and then it's gone back into this like in between weirdness, and we've had gaps and that kind of stuff, which is the trend has ended, restarted, neutral, dead.
Yeah, that's what it
Whatever.
makes it so difficult, really.
Yeah,
It's one out of 3 currency pairs in option trading that I lost actually money with in 2025.
yeah. I was going to say I still end up coming out net profit in terms of trades because I never marry a position. I'll still trade what's there and I hedge and that kind of stuff. But as far as the big cleanups I was potentially looking for and hoping for, didn't come through. I was looking at this going like, ooh, that's going to be it's a juicy trade right there. Yeah, come on.
But it would be typical in this case that I go long dollar yen now, and this is the exact moment where it really breaks down. Then
collapse. Yeah. So that's my only thing. I don't know how much further height we'll get from here. Obviously, it's around that close to that 160, which is really kind of the line in the sand, which it came very close to. That 159.50 right by there, and overall with Trump doing what he's doing, I don't think that's particularly good overall for the US. I don't know. I think this is where you start to get some of these things potentially coming back into line. Like if you get yields blowing out for the wrong reasons, obviously dollar yen could collapse. Some of that capital flight does actually start to attract back to places like the yen. I don't know. We have to see how much is going to push this, and then how much other countries are going to push back, right? And if all of a sudden people start switching trade deals and going, "Hey, China, do you want to do something?" Even if they start using it as like a kind of like flirting with the idea to kind of pressure Trump, and everyone sort of just throws in the towel collectively, in a way, then that would be very negative, I think. So yeah. I don't like the Greenland thing as far as the dollar index. I think it's overall very negative. If he starts to pull back from it, then potentially I could see that continuing. But right now, no.
Yeah, I mean, that's the thing keeping me from it as well, because it's so political at the moment. It's like one insane tweet, and it doesn't matter what indicators or what analysis you apply to your charts, it's going to be all obsolete once again because of something Trump, for example, tweeted. Difficult, very difficult.
Yeah, it makes it really hard with stocks as well, because basically after breaking it all down, pretty much like 50% of the gain last year in the NASDAQ and the S&P was literally just down to the drop in the dollar, right?
True, yeah.
So you start looking across the board. There's certain measures where I'd say, yes, NASDAQ, S&P, that kind of stuff should continue rising. But that's going to be contingent on some of these other components, with like the dollar continue to come off. Otherwise, you've got a bit of a headwind. It stays a bit more neutral. Plus, with the potential risk on the other side of it, if you've got that kind of neutral base with risk, you probably just wouldn't want to look at that. This is where it gets real muddled, and hence I think this is, again, you go back to gold. Gold is just the cleanest, by far and away the cleanest shirt in the pile, and not the cleanest shirt in a dirty pile. It's just full clean, and the rest of the pile is just dirty and over there, right? So yeah, right now I still hate it. Like I was saying in the first week, last week was a bit more clear. Now with the Greenland thing, further pressure with that, it gets a bit weird. I don't know. I think I want to see the next Fed chair, and then sort of start to hammer down some proper decisions.
Yeah, but seems like when it comes to the Fed chair, we have more clarity now as well, no? After what Trump said
last week.
Yeah.
Yeah.
So now we just need the announcement. I'm quite happy, though, that there are indications already that Jerome Powell is not going to be prosecuted. Because like I said many times, for me, he's like the last, I don't want to call it old school, but one of the last persons with a more, that are like public figures when it comes to economic decisions, when it comes to policy making, that seem to have like a moral compass still.
Yeah, well, exactly. And he's been around since, GFC times, and helping the Obama administration since then. So, it's not, he's been doing the rounds for a long time, right? Both in public life and private sort of trading fund management type stuff, right? So
I think he's going to
but stand up bloke, I gotta say, he's brilliant. Yeah, great.
I think he's going to be so happy when it's all over, and he finally can.
He can get a job.
Out of here. I'm done.
Yeah.
He can get a job at a JP Morgan branch as an advisor and not have to do anything. Basically, it's basically retirement.
Yeah. I would do the same like Janet Yellen.
Yeah, I would do the same as well.
You kind of like 20 times, 30 times a year, you hold a speech at some university and charge like 20, 30K or something like this. And you just have a stressless, pretty good life,
Yeah.
Yeah.
Or
guys,
like Obama. What did Obama get? Like
30,
40 mil for like writing a book or something?
Crazy, no?
And then that's it. Yeah.
I gotta run. I gotta continue working on a video I'm working on here, so I'm gonna have to leave you here for the last 30 minutes. We're gonna have, I believe it's going to be Richard Butler and Will coming on in a bit
on a Monday, I think. Yeah.
Yeah. All right. I will see you guys later. All right. Take care.
Take care.
Bye. Peace.
Yeah, and the thing is now, you don't even need to write that book yourself, or you need a ghostwriter. You can just tell ChatGPT, pretend you are me, and write a book.
Do your biography, yeah, exactly. Just take every speech I've ever said, everything this, that, right? Put it together and just write a story.
Come up.
Even fill in the blanks and just say it's a fictional tale.
Yeah,
make it more interesting, right?
Where you cannot find information, just basically tell I was busy being awesome.
Yeah, exactly. But yeah, no, I'm
I
going to
didn't
miss
ask
Pal,
you.
to be honest.
Yeah,
So,
me too. Absolutely, super going to miss him. I don't know why he tends to be criticized so much, but I probably this is coming with the position. Every trader I talk to, or everybody that is also in the financial markets, usually has a pretty high opinion of Jerome Powell. But I think that goes for the majority of the people that sit on the committee, honestly speaking, of the Fed. Seems to be one of the last sane organizations in the USA currently. I've been meaning to ask you earlier, did you trade anything today? Or are you sitting a bit on the sidelines like me?
yeah, no, I've been sitting on the sidelines today. So I will say the only trade I was sort of had through from last week was this on the Aussie, which
I always like that you are so focused on the Aussie, by the way.
yeah, it's because it follows one obviously I live here, right? So I know the economy very well. Two, it follows kind of the majors, but always gets whacked on the risk on, risk off.
Yeah.
That tends to be very systematic coming into New York. Obviously, Trump does something dumb. NASDAQ, the S&P come off. So does the Aussie, only for in the morning for it to rally back up, right? So it's a very nice sort of repeatable pattern. You know, identify, okay, it did NASDAQ come off just because of something dumb, because NVIDIA, whatever, something chip market, AI, this, that, or is it something actually structurally broken, right? So if it's not anything broken, you've got a very clean trade to play catch up. And particularly right now with the whole commodity complex, obviously massively rising, etc. So Aussie dollar, very much to the upside. It's been a laggard for ages because of the whole Trump effect. So I like playing that, risk off, buy into that, trade back up. Now, this was from last week. I was looking at entering that. I ended up, closing out the order because, it was Friday. And originally the stop was like here below that. So it would have technically just got tapped there. And then through this morning, if I saw that early today, I probably would have taken it. But I was not on the market at the time. This would be at 9 a.m. my time. I think today, last night I went to bed at about 6 a.m. And then so I got up at 10 or 11 during the day. So then had to go do some other stuff. So I missed out already by that time during Asia, unfortunately. But that's pretty much all I've been looking for at the minute. Same deal with the euro. Once I got up, we were already kind of at these highs during Asia, so I didn't see much trade there. We haven't done much since coming into London. Same with the pound, and then you've got gold here as well, just pretty much sideways. So after this morning's pump, I haven't really seen a distinctive trade overall. So obviously you got a gap here on the NASDAQ. You can see if stocks will recover. But I don't know if we're there just yet. If Trump double downs on this Greenland rhetoric, I think we could go further before we actually correct.
I mean, in a sense, in a way, you could probably play a little long here, no? Like to kind of bet from where we are right now on the close of a gap to Friday, tight stop loss, and then you have a nice risk reward to the upside, in my opinion. Whether that is going to become true or not, yeah. See, we dipped out of the channel there also to the downside for the NASDAQ. Yeah, I mean, in a way, it's a typical like we don't know what is going to happen today, so better let's sell our position, stay flat right now. Market reaction, which can lead to the most profitable trade when it comes to R, especially if you bet on gap closing. But it's also the kind of trade where you get stopped out very frequently until you have a trade that actually succeeds.
Yeah. So yeah, I would say stocks recovering is probably the highest willingness that I have to enter any kind of trade out there for the US stocks. Outside of that, yeah, all the majors, that kind of stuff, I don't really see too much. And like we're talking about dollar yen, potentially, yes, some kind of near-term rally off here. So hence, with that, you would potentially see S&P, NASDAQ, that kind of thing recovering, if that's the case. So vice versa, you could also run, long one, short the other, and just appropriately size the trades, and one should come through. Right, that would be my kind of split trade, which covers both happenings through there. But yeah, I haven't liked the start of the year too much. There's been like a couple of days here and there. I'm like, okay, great, we're back to trading. Then I'm like, either nothing's happening, it's dead. We've moved, 4 or 5 pips in 3 hours.
That's the thing, no? And I feel it's especially in the during the European session again. It's kind of, we have a move, and on paper it looks all great because we had like 5 days in a row, for risk on assets to move up, which is like super bullish for the rest of the year. But if you look at the moves, it's like Asia does something, Europe doesn't do anything, and then things start moving again when New York comes in, which is for me a symptom of the state of the financial markets at the moment. That there's a lot of liquidity. That liquidity needs to be invested, but the investors don't really have the balls at the moment to invest, to maybe go kind of all in. At the same time, they are kind of afraid of missing out, so they look for something that's behaving risk on, but is also going to increase in value in a risk off environment. Thus, what the things we are seeing in gold right now, and to, of course, an extent also in silver.
Yeah, exactly. I mean, the only other trade which I've got up here is pretty much the euro. So either jump in from where we are on the shorter timeframes, or else a secondary entry, as it looks as though this on a 5-minute is probably coming back to retest the 200, potentially a bit below there, and you'd enter somewhere down here. And then look for recovery up to, this would be TP1, 2, 3, through these levels up towards 117 ultimately. So you've got 116.60, 116.80, 117. Right, that's kind of the only other trade relatively that I can see through here. So another dip down through this standpoint, size appropriately, maybe you got to bring it back outside the gap, something like that. Which none of, like, taking this kind of trade, I don't really like it. That doesn't look very nice to me, right? I'd rather just hold off, see where price comes to, and maybe, just around keeping a tangential eye on the market. Then you see something like this, and then you sort of jump in. But right now, I'm not hunting anything particular, because it's a bit scrappy. So, I mean, you might be able to, if you want to take like a near-term thing, capture the kind of 10-point downdraft from here. You're at 116.20, come down to 116.10, 15 for a retest. But I don't know.
I was just, talking about MetaTrader acting up, and I got again for the trades that were supposed to execute it now an error message from MetaTrader.
Oh, really?
It's such a pain in the butt.
After you had it fixed.
Yeah, but now somehow MetaTrader shut down due to security reasons, whatever that means. It's really
on MT5. That's weird.
On MT5,
yeah.
I got it reconnected now. Now I have to see if my bridge is going to. Okay, give me like 5 minutes. I'll be back very shortly.
That's right. Pound dollar. Andrea was saying. So pound dollar is something I do believe we still do have some general downside. So this was the trade outline from last week. we've broken down through these bottoms through here, right? Now, from this point that we've run up from, we have met that minimum criteria through this downdraft. So we might have a little bit of a pause. Obviously, we've seen that correction today after the gap lower. We've come higher, just like euro dollar, Aussie dollar, everything else. For the time being, I've still got the downside sort of targets through here. But after that correction, the heavy gap lower, that might be it. That might have been the extent of the move to 133.40. So right now, I would be waiting for a bit of a dip back and then potentially going long from this standpoint. So I'd look for a slightly higher low. Let me zoom this in just a touch. So after having these, obviously you slightly ignore this being the gap down there from today. Now I've got the low here, higher low. You look for a retracement into here, then go long. So for another high low, which will also come into where these moving averages are smoothing out to. Then take TP, stop loss, something like that. So back to the drawdown, the fall off point, I should say, up here at about 134.40. Back from last Friday. So that's what I'd be looking for on pound dollar. So I look for a slight pullback and then into longs. So kind of similar as well to what I was saying on euro dollar. I think that's ultimately the cleanest move, something like that, back into this kind of level. And then potentially, I don't know, any kind of Trump tweet going into New York for whatever reason. If he decides to turn up and choose violence, you might get a further dip or else a spike either way. So that would be the conditional aspect to keep an eye on. Though I think at this point it is net negative overall for the dollar, like I was saying. So I don't think this is too bad of a general idea through that. Back to the Dixie. Now, typically, we'd run through the Dixie almost every day. For some time now, we actually haven't covered the Dixie as much. It would often be one of our main starting points. So reason being right now, with a bunch of the majors that actually make up the Dixie, we're very neutral or flat. We've got conflicting signals. So these pairs are kind of moving a bit more idiosyncratically rather than in sync with a clean bias. So just like we've seen dollar yen sort of just powering on higher endlessly, right? We've come up from the 150s, lower 150s, all the way up to towards 160. Yet we've seen euro dollar pretty much trade sideways with a slight downward tilt, but nowhere near as far as the couple multiple hundred pips for dollar yen. So we're still relatively up towards the highs. And at the same time, we've seen like pound dollar correct. We've seen Aussie dollar higher. Dixie right now is not giving a major impulse to overall dollar direction. A lot of conflicting signals. We've seen the same thing in the bond market as well with treasuries and such. Very back and forth at the minute. So yeah, if you guys have anything else you want me to bring up and take a look at, throw it at me. Or any other further questions, go for it, because we're pretty static right now. Gold, same deal, consolidating through here. Oil is something I will say we've continued that draft lower. Like I was talking about last week, I don't think this is going to be much of a run. We'll get capped through here at that 62 level, which we did right on the tippy top there. There's still a massive amount of supply for oil, so I don't think we're going anywhere anytime soon. It's going to be this continued basically 55 to 62 type range for the time being. So supply is definitely outweighing any of the Venezuela, etc. concerns, and arguably Venezuela occurring just potentially brings more oil onto the scene. Akram saying, can we get the main question, LJ? Red Bull 2026 livery, bullish or bearish? I see it big bullish, CPI candle. Dude, I haven't looked at the actual I don't think I've seen the actual car livery. I saw the new like team outfits, I guess, if you want to call it that. I don't think I've seen the car livery. But I will say big bullish as far as performance wise for Red Bull, Mercedes, and probably Aston Martin. I think that'll be the top three. But particularly Mercedes and Red Bull seem to have the power unit, everything else figured out very nicely. Then obviously Aston Martin's also running the primary fuel with what company is it? I forget, that makes the standards for it. And then they've got Adrian Newey, of course, doing his magic. So I think they'll be doing pretty well. But dude, I got to look at the new liveries still. So
Doop 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 doop. Max Verstappen.
Max Verstappen.
Here
you
we
got it.
go. Finally asking the real questions here.
Oh, that does look good, actually.
I don't know if it's like the last version of it. It does look good, yeah. However, I don't agree necessarily on Aston Martin with you. I think they are going to need still one more year. So
You
especially,
reckon?
I mean, Adrian Newey now has like a double function. No? He's like the head of engineering, of of design. Plus, he's the one giving the order.
I'm sure he's gonna palm off all the actual order and the media stuff and all the extra stuff to other people. Be like, I'm not doing this. Like he kind of already said that on the grid walks when he was getting crushed. He's like, dude, I'm not doing it. It's in name only
as well.
Yeah. But who does who does the fuel specs? Because they all use different fuels because they're sponsors.
Yeah. There were some problems as well.
But Aston Martin is the only one with, I forget which company it is, that they actually made the regulations off with those fuel specs. So arguably they should get a boost in power from that as well. So I don't know. It'll be interesting. I kind of want to see Aston to, as some kind of underdog player, like come through. I want to see Alonso, having some, some clean runs into the end of his
the grandpa
lifetime, right?
Of F1, yeah, really. Yeah.
Exactly. So I don't know. We'll see.
Did the driver lineup change for them? No, it didn't. No.
I think it's still the same. For sure. Yeah, it's still Alonso and Stroll.
Stroll, yeah.
Yeah. They need to get rid of Stroll.
They're never going to get rid of Stroll, no, as long as his daddy is the one bringing in the money, supplying the money. And I have to say, he's not like that bad of a driver, honestly speaking. It's not like we've seen worse, than Lance Stroll in the past. And he used to be quite good, no, in F3 and F2, no, if I'm not mistaken.
Yeah, and he's had some really like one-off things in F1, but then he's just relentlessly.
Isn't he like also in the top three of the youngest drivers to ever reach a podium?
Yes, which is
insane.
Just, I like if he the thing is, if he didn't have that stuff, I don't think he'd be around at all, right?
Probably.
It's these weird little like freak bits and pieces like that.
Suddenly a stroke of genius hits him,
Yeah.
Like I'm super bullish Bottas. Also, Bottas is one of my favorite drivers. Not only because he's very talented, he's very good, but he's very modest about being good, and yet very funny guy, obviously, also. And he's not that super ego-driven like you see with many others. He's like always able to take one for the team, as we've seen over and over again. with him driving with Hamilton, no? And yeah, but I cannot wait. It's another, like, what is it now? Like 2 months without F1. Come on. It's like,
I know. Bottas is our resident adopted Australian as well.
Yeah, he
you know,
is.
like,
And he has the greatest haircut in the world also.
Yeah, still rocking the mullet and everything.
Yeah.
Oh, it's wild, honestly.
Other than that, you guys know I'm a McLaren fan. I've been my whole life a McLaren fan, and I sincerely want Oscar Piastri to make it this year. But I don't know if McLaren is going to be able to be on top again and be dominant like they were last year. It always feels like McLaren is a team that kind of needs more development time, to get on top of things. But I might be wrong, of course. So I think it's going to be Mercedes, between Mercedes and Red Bull next year.
I definitely agree. I think Mercedes definitely probably is my front runner right now.
Yeah.
I think they've got the drivers for it as well. Very consistent, that kind of thing. Red Bull, I mean, you're going to need not just Max to pick it up.
Yeah. You need really good, consistent driver. I hope, Hadjar is not one getting under the rails again.
We need Hadjar to...
Because he's a really good driver. I mean...
He is.
It's insane what he did in the little sister team last year, no?
I think they understand that now, so he probably has a bit of cover, even if it doesn't immediately go right, that they'll sort of stick with it, especially with development of the new regulations, that kind of stuff.
Yeah.
But right, it's better just to keep someone, get that feedback, that kind of stuff, and then develop. So he might have a 2-3 year stint potentially, even if they're not really winning, not really going anywhere. I don't think they'll just replace.
But it also shows, like, after everything we've seen with a driver in the last season for Red Bull, that Sergio Perez actually was really a good driver. No, it's the only one amongst those really able to kind of get results with a car that's more tailored towards Max Verstappen.
Yeah, I think he was exactly like that. It's almost like a Stroll type situation where he'd be in the bin and then other times just pull off ridiculous stuff and be right up there. But obviously Perez did it sort of 50-50, whereas Stroll is like 595 or something. Right? So 95 of the time you see like, who's out? We got 18... it's Stroll and like someone else, right? Yeah, of course. Stroll's the car. Yeah, so yeah.
Another 2 months, and then we are going to be back on the grid.
Indeed.
God, this market is so boring today.
I was going to say, I'd love to show you guys some stuff, but there was quite literally nothing going on right now. Look at euro dollar on the 1 minute, like and from 24 to 21, guys. In the past couple, like there's just nothing doing right now. So,
I mean, in a sense, if you like, if you want to gold, and you could argue that maybe this is a chance to buy gold right now again on the 5-minute charts. I wouldn't bet my life on it because we are only talking also about a little move of potentially like $6 or $7 to the upside. But if you have, if you're itchy for the fix and you want to trade something, huh?
That was silver. Look at silver right now, actually.
Silver, hold on. Let me switch quickly.
It's not too bad.
On what time frame?
15, I guess.
It's right.
Zoom out a bit more.
Oh, you mean
as all things considered, I think it's not too bad as far as where things are.
I mean, depends on where are we. 50,
I'll show you on mine.
Yeah, show okay, exactly. Yeah.
So originally, this sort of 87 odd to 92 kind of area was like, okay, when we were saying I wouldn't look to short anywhere before here. And we did meet the tops through here. This was back Monday last week or something. And then we just, kept running through. We come into that area. We came just a touch above, then did collapse down to the base of that. Traded sideways through here. We're now trying to sort of make another attempt higher. And so since given everything else is pretty poor, silver has this large potential to drive higher. I think you've probably got a reasonable structure right here. We're into the middle of the standard div bands. You could place a stop just below this recent relative low, seeing if we will actually take that drive higher and then run out to I mean, this is ridiculous. When you start pulling this out, you're like, okay, we're going towards 100. Right?
Oh my
God.
God.
I mean, I feel like surely this is kind of the last stint somewhere in silver here. I don't know.
I'm going to record this and quote you then 3 months down the line when we're at $500. It reminds me so much of GameStop,
Yeah, I like with this stuff we have to stop somewhere at some point, right? Same with gold, or at least the acceleration of the move, the momentum sort of starts to peter out, right? And that volatility really compresses, comes back down. But then similar deal with gold. Where do we peak? 5.5, 6K, 6.5K is going to be. I think we potentially just rally until Trump is out of office, and it won't be until then things potentially calm down, depending who comes in next, I guess, and then maybe then you get a.
Until we return to the normal, boring kind of geopolitical environment we had like 2015 or something like this.
Yeah, exactly. Which is why I'm like, even with this, like I think this is not, to be honest, a bad move. Like we've cracked those highs through there. It looks like we're building another base at the moment. We've got the 50 moving average coming up through here. I think that's
I agree. Right? Am I going to trade that? No.
No. Yeah, exactly. Yeah.
But it's making sense, and also, I mean, apart from everything we are saying here about, it needs to come down, doesn't make any sense anymore, but purely from a trend following risk reward ratio, this is a good trade.
Yeah.
Because you only need to win one of those, and then for the next 4 trades, you're going to have peace of mind.
Exactly. So it's kind of the same thing as the dollar yen thing. I don't really like, stepping in front of that train, but that's the current direction the train is going. So you're going with it, and as long as you risk control, risk manage that, then that's all fine.
Absolutely, yeah. Dirk, have you ever driving raced in Nürburgring? In real life, I haven't, because I live very far away from it, like really on the other side of Germany. But I've driven it probably hundreds of times virtually in sim racing already. In my preferred car, or 2 preferred cars, one of them is a Ferrari. The other one is the Porsche 191, not the Evo one that makes like the absolute record. By the way, you should go online and look for that video on YouTube. It's insane the kind of speed and downforce this car has. I love it. It's I mean, one of the most infamous tracks, and you make one mistake and then you have like 7-8 minutes of driving time go to the waste because that track is so long.
Yeah, the track's huge. I'm surprised you haven't been. Like, yeah, it's the other side of Germany, but I mean, you're still that close. But that's crazy.
I know. But to be fair, I haven't been into racing for that long of a time. Kind of racing kind of like came to my attention again after I was like young Dirk back then at Michael Schumacher times, and I've just been following it like maybe for the last 4 years. And the thing about sim racing also is it's like it takes up a lot of time to practice, and I simply do not have that time. And if you want to race Nürburgring in a decent car, saying I'm not going to use my own car for that, which is like, what's the fun of going around there at 150 kilometers per hour? That's not fun. And so you want to do it in a nice car like a Porsche or something like this. And the thing that's keeping me from it is you can rent those, but the insurance premium is very high, which is okay. The problem is if you like damage the car somehow, which I mean, let's be honest, there is a possibility in doing that, where you very quickly end up paying like 10 or 20,000 on top of the insurance.
At least. I think each rail you crash into, you have to spend to replace as well. And like per pole section, it's like €1,000, €1,000. So you crash kind of like 30 meters of, by the time the car stops.
And I'm not that good of a driver also that I comfortably can say I calculate what I was doing back then in sim racing to the real world. Be it something like in sim racing, I use both my feet. I use my left feet for braking. I never... I tested that a couple of times in a real car, and it was like going like on super steep braking immediately because I just don't have any feel in my left feet. But maybe we should do something like a community 5S event at the Nürburgring in the future. That would be something, no?
That would be cool. Yeah. Definitely, we could do like a sort of multi-team thing across some of that stuff.
Yeah.
Whether it's on sim or whatever else, right? And I don't know, we can come up with some other things.
Yeah, I guess they're not going to sponsor us like Porsches.
Yeah. I mean, it'd be wild, I'd be down, but not sure that'll happen. But hey,
bring your own Porsche. Richard says in the background here.
Yeah, BYO.
Richard,
your own one.
Hello. How are you doing, man?
I'm good, and you?
Good and you, or good and you?
Good and you.
We are very well on this rather slow day when it comes to financial markets as well.
Yeah.
Hey, William.
Yeah. Well, hello there. How is we?
Where's the milk tea?
Milk tea's gone. I had that at lunch.
Nice.
It was good though. It was really good. Have you tried dong lai cha?
Dong lai cha. What is dong lai cha?
Which is iced milk tea.
Oh yeah, of course. Oh, that's in Cantonese, no? Because in Mandarin it would be
Bing lai cha.
Bing lai cha. Yeah, exactly.
Yeah, well, Bing lai cha.
Yeah, but I have to say, when it comes to milk tea, when it comes to night cha in general, I like it. I prefer the hot version over the.
Yeah, so did I. But my partner fancied a cold drink last night, and she was like, "I fancy something cold. I don't want a hot drink." And I was like, "Oh, fair. Yeah, okay, whatever." I fancy a hot drink, so I'm just gonna have a hot one. And she was like, "No." So she ordered it, and it was cold, and I was like, "Can I try some?" She's like, yeah, of course. I was like, "Oh my god, this is amazing." Dude, it is so nice. Yeah. Dude, I'm so fat at the moment as well, man. The food out here is just ridiculous. It's so good. So back in the UK, I used to be hungry all the time because that was optimal. You've got to be hungry. The body isn't born to be just constantly satisfied. Whereas here, I don't think I've been hungry in the past 2 weeks.
The nice Cantonese roasted porkman. Oh, that's the stuff, really. And yet everybody here in the Western Hemisphere thinks like, oh, Asian food is so healthy. When you see them actually cooking it and the amount of pork lard they put in the wok,
yeah.
Okay.
Yeah. And to be fair, I mean, if you order it correct, like if you order some of the right food, it is super healthy, but it's so much of it as well. Like they're not afraid to really throw the food at you.
Yeah.
So the calories I'm intaking at the moment are enough to feed me for a marathon each day.
Yeah, I was about to say, I don't know if it's healthy. It's, deep fried this, deep fried that. Like, goddamn, it tastes great, but that's so much rice, so much everything. Oh,
It's so good though.
Calorie
Yeah,
City.
It is. All right, guys, I have to make a move. Wish you all the best, and everybody out there, remember to leave us a like, smash the like button, subscribe to the channel. I saw we are really closing in, like slowly at 100K subscribers. That's the big goal.
Yes.
And as has been hinted already in the stream already, there is for sure going to be some nice big giveaway once we reach 100,000 K in subscribers. So yeah, smash that like button, leave us a like, subscribe, I wanted to say, and see you again on Wednesday. Take care, everybody.
Indeed.
See you
Have a good
later.
Hey, Dirk. Ciao, man. Buddy, I will have to dip as well.
I am
See you
here. I'm
guys
just
later.
making a quick.
What is this? Oh, it's coffee.
It's Nescafe coffee.
It's got Nescafe over in China. Nice.
Yeah, Nescafe
Yeah.
Gold.
Do you know how annoyed my missus is for not trying like proper like Asian teas and coffees? I'm like, no, I want my Nescafe Gold because that's what I stream with at home.
I want something from home. I'm homesick.
Yeah.
Everybody.
That's classic. Nice. Oh,
You
man.
were saying you need to dip out, mate.
Yeah, I got a dip. I got some bits and pieces to get through. So I'll see you guys tomorrow. Hopefully the market sort of kicks up coming to New York. Very sneezy right now. So good luck, guys. And I'll see you tomorrow. Ciao for now.
See you
All
later,
right, mate.
mate.
Have a good one.
Peace.
See you tomorrow. Well, now I'm just talking to a wall. An absolute just a
Well,
wall.
yeah, I mean the wall answers you though.
Yeah, but that's weird. It's like a disembodied voice. You just see this voice travel, but you don't see where it's coming from. So
that's fair.
you guys may have noticed that my streaming setup is a little bit different today. I'm going to be painting this wall, so I needed to move things out of the way. The couch that's back there will just kind of like be shifted a little bit forward. But there's also a bunch of stuff on the other side that also needs to be done. So I needed to move everything because we'll, like I said, we'll be painting and whatnot. And the weather hasn't been great for paint. So it's very wet and damp. So I need to like get a day where when it's not raining and we can actually, take off all of my wife's paintings, and then I can paint the wall. It's due. It's very due. So yeah, for now, this is what the stream is going to look like from my.
I mean, to be fair, it's better than mine at the moment. So I need to order a bunch of stuff because I still can't find a bloody souvenir shop that just has a simple photo of Hong Kong. So
Go
I'm
to
gonna
the
have to order-
airport. To the airport.
Huh?
At the airport, you should be able to have souvenir.
Yeah, but that's going to cost a fortune. It'd be cheaper to order it online. So I can order stuff from China, and instead of it, so if anyone's ordered stuff from China living in the UK, it usually takes like a business year to get here. Whereas if I order it from China now, it will come within the week, which is pretty cool. So I'm just going to order a pile of stuff from China and just litter this wall full of sexy pictures of me. I'm joking, of Hong Kong. No one wants to see.
Definitely
Pictures.
not going to be sexy of will.
Yeah, it's definitely not going to be sexy if they are pictures. Dude, I look so red at the moment. I've just come out of a really hot shower after going for a run. My face looks so pink and red. Can I, sort out my lighting? Do you reckon if I just, no, that doesn't, no. Oh, that looks, is that okay? Ooh, that looks a bit better.
Yeah, I went to the gym this morning and I'm feeling it now. Like my body.
Oh,
I'm
nice.
tired.
What did you train?
Yeah, I'm tired. I did. How can I put this? I've set myself up with a coach, a training program. Like it's just an application. Like it's like a.
Okay, yeah, I got you.
And I'm following this app And the last 2 weeks I was doing just the circuit and a lot of cardio during the day. And this morning today, it wasn't the circuit. It was something completely different. And it's exercises that I have not done. Just straight up, not in years, I haven't done any of these exercises. So when I did them, I was like, oh, this isn't half bad. You know, like I can survive this. Here by the third exercise, I was dying. Just I couldn't walk. I had to crawl from station to station.
Yeah, mate. Well, I know all about that.
I've signed myself up for a how do you put this? For a sciencey thing. So
okay, do indulge us with this sciencey thing.
This program that I'm following, they have a diet that they're busy testing. All right, and they were like, well, they're looking for people to just kind of like have this diet for 30 days and then just kind of like see how it feels, how it works,
how your body responds to it. Do you have any allergies?
No, I don't know. I don't have any allergies.
If you don't, you might find out.
Well, it's not weird. It's
just like a
you there's 4 things that you eat, but you eat them for 30 days, and you can eat as much of it as you want. It's chicken, it's broccoli, it's potatoes, and it's carrots.
Okay. Oh my god! So in other words, your PT is Jonatan.
Yeah. So on top of that, I'm allowed like a teaspoon of like a good oil. So it can be like a avocado oil, or it can be like a olive oil or whatever. You know, just something like that. No deep fried food, all of that kind of stuff. But you're not allowed to eat yourself until you're stuffed. You must just eat until you're pleasantly satisfied.
Slightly satisfied. Like I know you mean. You eat to the point where you're like, if I eat any more, I'll probably be gorging. Whereas like right now, I can feel that I will be hungry later.
Yeah. So
yeah, I get you.
That's where I am right now. And so far today, I've had 3 chicken breasts, probably 3 potatoes, and probably, I don't know, like 4 carrots or something. I don't know. And that's it. Like no extra sugar, no like no creamer or milk or something in your coffee. You're allowed to have coffee and stuff like that.
Yeah.
But no soft
so you are allowed coffee. You're allowed stuff like that.
Yeah, but no sugar and no milk. And then in my mind, it's like, what's the point?
Oh wow, okay, fair.
What's
You're not even like milk.
So it's water and a bunch of it. Yeah. So I'm feeling a little bit weird today. Like,
yeah,
I want to eat other things already, and it's the first day. And
that's all
you're allowed for 30 days. So
yeah, usually it's like week 1, end of week 1, start of week 2. People start getting those like, I want something else. I want Crave, I'm bored now. Whereas day 1, bro, keep me updated with that. I want to know. Having said that, it depends the sort of person you are. Like me personally, given my background in training and exercise and stuff like that, like my partner now says to me, she's like, "Are you not bored of this dish?" I'm like, "No." How?
No,
I'm like,
"Not right now, no."
No, I was like, "It's nice. It tastes yummy. It's got all the nutrients I need. It's got everything that I want in it. It's got protein. It's got carbs. It's got all the oils. It's got everything that I need to survive, and it's yummy. I'll eat that for about a year and not get bored." She's like, "How? Like, look at this. You can try this." No, I don't want that. I want this. She's like, How? Like, even she's starting to get bored of like some of the dishes that we're having, and she's like, "Can we go have rice?" And the thing is, like, rice gives me like a bit of heartburn. Like, I struggle with rice a little bit, and she's like, "Can we go get rice?" I was like, "Don't want rice," and she was like, "I'm sick of noodles," because like, so Hong Kong is like, there's a stereotype that all Asians eat rice. Well, the stereotype in Hong Kong is that all Hong Kongers eat noodles. Like noodle soup is their sort of stereotype dish. And she was like, "You're making me bored of my own stereotype dish."
Yeah.
And I was like, "But it's so good." But yeah, she's forcing me to eat like other stuff now. But like, I don't want to. I'm a bit like Jonatan. I could just have chicken.
Look, I don't mind. I really don't mind the ingredients. I like potatoes. I like carrots. I like broccoli, and I like chicken. The thing is, it's the other limitations. I've never been somebody that like overeats, but I am somebody that I have to finish my plate.
Oh, no, fair. Yeah,
So
yeah.
parents.
Your mum thought you was
"There's
rude
hungry
not to finish your plate.
hungry kids in Africa, you should finish your food. That kind of like thing.
Yeah,
Don't waste food. That was like ingrained in my brain. So, if I have a dish and I'm hungry, I will eat that whole dish. Pizza, there's no leftover. Leftover pizza is not a word that exists.
Not even a burnt crust.
It doesn't matter. And the thing is, I've just decided I'm gonna just do that. But yeah. Anyway, have you been looking at the market at all? I know it's Monday and it's a bit slow. I mean, I've only been looking at NASDAQ, and NASDAQ is criminally slow. At the
Yeah, no, literally. Same with gold at one point. I know we had a bit of a jump earlier on this morning, but gold today, since that massive gap up on the 15 minutes, done nothing. Like, seriously nothing. It's flatlined. But
yeah, the fact that we have this massive gap on like both NASDAQ and gold, this is definitely a lot more to do with that like issue that we have with Venezuela, dollar,
yeah.
like all of this is NASDAQ, and it's even on the terminals.
There seems to be a lot of dollar if buts and maybes going on at the moment. In fact, let me try and find. So I've got a friend who is very, I don't know how to put it. He's not institutional.
Okay.
But he's not afraid to speak his mind on social media. And let me see if I can find it. I don't know if I'm going to, but he posted regarding a lot of US bonds and a lot of US stocks and trades, and spoke about, especially with Japan and all. He put quite a long spiel up on Facebook as well, of all professional platforms, regarding his opinion on what we should be doing as not only individual traders, but as nations, due to everything that's going on in America. And I read it and I thought, he doesn't hold weight in the industry, but he's a very, very knowledgeable guy. Does that make sense? It's a bit like LJ on LJ's brain on steroids.
Yeah,
like it's a bit like that. Yeah, he's a bit like that, but he isn't an institutional trader. He's just like in between us and institutionals, and like he flies all over the world, especially the US. He works very closely with US stocks and speaking in the US. So when I saw this post, I thought, wow, when he got a little bit rattled or a little bit triggered, that made me think, what does this mean? So yeah, I think there's a lot of dollar if buts and maybes gonna be going on now over the next course of the next couple of months. What that looks like for the stock market or for the indices market, I don't know.
Okay, so we do have a bank holiday today for the US. So
yes, yeah, I was gonna say they're closed now in the New York session, right?
Yeah, but we'll only see the impact of that during the New York session.
Yeah, we've got another.
Yeah, it's a few more hours at least.
2 hours and 15, something like that.
My worry is that this gap that we have on the indices is a forerunner of things to come. It's this idea of the stock market kind of like wanting to start depreciating very quickly. And the fact that you saw it on gold as well, but gold is way more geopolitical. It's way more impacted by uncertainty, and that's pretty much where we are right now. I feel like we have quite a bit of uncertainty in the world, and its main driving force behind it is Trump and the dollar.
Yeah,
What is he
absolutely.
doing? What is he thinking? Is he causing unrest for a specific reason? What's the reasoning? And we're seeing it. We're seeing the movements now. That being completely set aside, all you have to do, and I, is just capitalize on the movement.
Get on your surfboard and hope the wave isn't too big to take you out.
Yeah, I mean, all-time high yet again on gold.
Yeah, I know.
Very
That
nice.
was bonkers. That was absolutely bonkers to see.
But that's crazy. You have this absolutely massive gap. Like the gap is larger than the actual movement that we've had throughout the day.
I know. Yeah, I know. Wild, isn't it? Kind of to be expected. Like so many people, like I've had messages today of people being like, "Bro, what's happening with gold? Oh my god, no one expected this." I'm like, really? Did we not expect this? Do we want to go as far as saying this is unexpected price movements? Like I'm gonna be honest.
This, I mean, consolidative probably is expected, but this gap, I don't know. I don't know if that is like.
I don't know. Maybe I'm not gonna say I've got a crystal ball and I said, "Oh, we're gonna wake up Monday." Yeah, oh, we're gonna wake up Monday morning to an absolute gap on gold. But if you said to me, "There's going to be a massive gap on gold at some point to the bull side over the next couple of weeks," I'd have been like, "Yeah, that doesn't surprise me."
I mean, if you consider it's the rollover for the weekend. Over the weekend, there was a lot of news. Over the weekend, there was a lot of like geopolitical unrest and new tweets and new, information that came forward. So, it makes sense that there's a gap. I'll just say that it makes sense. It does make sense. The question is, how are we going to trade this? How would we trade the NAS, the dollar? How would we trade all of the pairs right now that have this gap? So if you have a look at Euro USD started also with a gap as well, but this gap was very quickly filled. So this initial, let's call it shock factor, this initial shock factor over here was short-lived. The moment, institutions or whatnot started playing a little bit as well, it made a lot more sense. The gap itself already filled, so not too bothered. So we need to start looking at higher time frames, and we start needing to look at other areas to see whether or not price wants to continue going up, continue going down, or go sideways. But with gold, you have this massive gap that's unfilled, and generally, these gaps do get filled at some point, because there's a lot of orders that are just sitting here piling up that were just not opened, or that were, for argument's sake, opened, but only a portion of it was filled due to the fact that it started moving. So I would like to see gold and NASDAQ as an example, maybe not today, but potentially throughout the week, find its way slowly but surely back down and filling this gap in its entirety, and then from there on start pushing potentially higher. But that is because I feel like whenever we have like large gaps such as these, they do tend to get filled. How long it's going to take?
I fully agree with you. However, recently, bang on. I was going to say, literally, recently, not so much. Like if you said to me a couple of months ago, or like maybe beginning of 25, bro, what do you think of gap fills? Are they gonna gaps? Are they gonna fill? I'd have been like, yeah, whether like within the next week or two, maybe the next couple of weeks, gaps will fill. Gaps will find its way to fill, rebalance themselves, and continue in an intended direction. Recently, and I'm talking within the past couple of weeks, couple of months, like since maybe November onwards, maybe even October onwards, we've been struggling to fill those gaps. Like we've gapped, consolidated, intended to pull back, and then just continued onwards again, and even considered further gaps. So if you ask me, like gaps fill, yes or no, like are they going to come back? I'm an R a lot more than I would have in the beginning of 2025.
Yeah. So I agree. I agree with you. The idea is just kind of, it's so large that I would kind of like venture a guess that at some point it will probably get tested. Yes, we do have this one over here, also a Monday rollover, also after high political. This was Venezuela, you know, the whole debacle there that led to this. So, but at some point we did attempt to try and push back lower into it. Even though we didn't fill the gap, what we did have was an attempt to push it lower. The differences as well for me is that over here we'd already been, this was Friday the 9th. That week we'd already started establishing a new bullish trend after a little bit of a retracement after a bullish trend. So gapping is not that bad, okay? But we've had significant slowdown when we reached the all-time highs, new all-time highs, and we've kind of like been stuck in like this bit of a bracket until Friday, where we had this dip lower, and then we closed very flat as well. So no new initiation of an upward trend, but rather a consolidative end to the week. I mean, from, what is this? From Thursday, like, how flat is this? It's just so flat. And then just that one reaction and then back straight into flat. I don't know whether or not this sudden gap is because of gold being super bullish, first of all, and secondly, because people really want it to like go up. Because if you had the gap, very much like you did over here, and it continued moving bullishly, and even the follow-up was all still bullish. But right now, we have a gap, and we went straight into consolidation. That's my concern. That's what I'm seeing when I look at gold right now. If we had immediate follow-through, fair, you know, prices just continuing to push higher, then it makes sense. Then the gap makes sense. The gap makes sense in the sense that, you know, there was high impact news that came over the weekend, but there's zero follow-through. It just went straight into consolidation. So to me, it signifies uncertainty. And even this gap to me seems uncertain as well. That's the difference between this gap and the previous one. That's why I was like more inclined to think of it potentially dripping down, filling the gap, and then from there on start pushing higher. Anyway, we've got a few people in the chat at the moment. We can
so I was just, like I said, so my Wi-Fi seems to be a lot better now. So they have looked at it and had a fiddle. The Ethernet cable is now working. I don't know if you can see that. The Ethernet cable is now working and connected to the back of my laptop, which is fantastic. So it means that I do have, and my LED only now wants to start flickering. I turned it on at the beginning of the stream, but
dude, if you hear cat in the background, it's my one cat. She has a toy, and she brings the toy when she wants to play. And I'm streaming, so she'll hold the toy in her mouth, and she'll you know, make noises as she brings the toy, wanting me to throw the toy for her so that she can chase it and bring it back to me. And so if you do hear that, I do apologize if it's like a little either loud or a little too cute and cannot contain yourself. But yeah,
you're okay at the moment. I can't hear your pretty cat. However, it does look like I'm about to get arrested, so I may just unplug it in a second. Yeah, I'm probably going to unplug it. But you know, I was just having a quick catch up with chat now. I do apologize, however, guys, you know, like I said, I haven't managed to find any decorations. However, I'm just going to order a load online. I'm going to order a new one of these because that blue flashing is starting to piss me off a little bit. So I'm going to order a brand new LED set. Ooh, hello. Goodbye. So yeah, I'm going to order a brand new LED set and some brand new posters as well for it to look all sexy and snazzy. Once they come, and then my LED, my sort of trading setup in Hong Kong will look a lot better and a lot more professional. But until then, we're going to have to put up with strobe lights and poor lighting and a naked background. But until that's all sorted, not long. But yeah, like I said, it's a lot better. However, I'm hoping it will improve significantly further, but we'll have to see. We'll have to see. So far, so good. I am having to bring my chat up on my phone, so I am reading chat up. So don't worry, guys. I'm not ignoring you. I am still bringing chat up and having a look at it and reading what you guys have to say. I'm just too nervous to bring it up onto my computer at the moment, just in case my whole thing just crashes.
Well, we can have Remy just bring it up. It's not a problem.
I'll tell you what. Do I try it? Do I bring it up?
You can go ahead, mate.
Let's bring it up and try it. Let's see what happens if I bring it up and try. I mean, worst case scenario, I got to restart my laptop and re-enter the room, so it's not that bad. Seeing Michelle saying, is this about trading? This is indeed about trading. It's also about friends catching up and having a bit of a banter, talking about the markets, all things fundamental, all things technical of the lot. Unbiased Trader, morning, Richard, and hello, Wilhelm. Hello, Unbiased Trader. How are you doing, my man? Good to see you in. Bro, what are you looking? What are you looking for, longs or shorts on Euro USD? We can have a look at that in a minute if you would like.
Yeah, we can have a look.
Awesome stuff. I'll tell you what, you can take Euro, I'll take GU if you want. Louis, good morning, team. What's good, Louis? How you doing, my man? Good to see you in. It feels a lot better being able to bring you guys chat up without worrying. This is quite nice, actually. It's bank holiday in the US. Yes, indeed, it is Martin Luther King Day, I believe. Someone correct me if I am wrong.
Yes, it is. It's Martin Luther King Day.
I thought it was. Yeah, I was going to say, yeah. So Martin Luther King Day today. So big shout out to all my American friends and viewers out there. Every single like, share, and subscribe acts as a multiplier for our reach. 100%, guys. We really appreciate it if you can give us a big fat thumbs up on the video. If you can subscribe if you are new here, that would be even better, because you're never going to find a better community than here at the Fivers. Also, do us a massive favor, guys, and share it amongst your friends. Share it on your social media and share it with whoever may want to come watch us talk about all things fundamental, technical, and terrible. So, you all right, mate? Zar, I am good, my friend. How are you doing? Yes, Martin Luther King Day in the UK. Louis saying, I think gold will take high first. What's your thoughts on that, Rich? Gold to take highs before it drops, yes or no?
I mean, it didn't when it had the opportunity. I don't think it's wise to ever bet against gold. Gold has been very, very bullish for the longest time, and it keeps rallying and rallying and rallying. Yes, short periods of consolidation, short periods of retracement, but in general, it's just very, very bullish. That being said, like I said, this massive gap, I feel like needs to be filled first, based on the fact that it was so flat. So it can, hypothetically, push up, sweep the highs, and then start pushing lower, but that doesn't feel right to me. Even though every time we've made all-time highs, new all-time highs, we've had a little bit of a retracement. So new all-time high, bit of a retracement, new all-time high, bit of a retracement. New all-time high, no real retracement, just kind of like flat, an attempt to push lower, new all-time high, bit of a retracement. So I think there's a better chance of it first pushing a little bit lower and then gaining momentum again to push higher.
Yeah, I think that's what I'm more inclined to edge my bets on a probability happening. I'm just going to see what happens. I'm just going to try and analyze it as it comes, but I would much prefer to see it pull back, attempt at least to have some form of fill, and then continue if it wants to continue.
Yeah, a little bit more.
Yeah, exactly. I do hate trading when gaps are local, should we call it? That's it's scary for me. I'm not too on that. Seeing some more comments coming up, which is absolutely awesome. Guys, if you want to see us analyze any pairs, if you want to come give us a shout out, if you want to come have a chat with us, drop your comment in the chat and we shall be able to see it. Give me a sec. I'm just going to pull this out.
Yeah, I was about to say, like, the flickering
it's doing my head in. So, plus it was making me look yellow at one point because like my camera here, the lighting was just trying to adjust to it. So I pulled it out. I'm done. I've given up with it. Yeah, let's have a quick catch up with chat. Best not to trade gold today at all. Bank holiday. That's a good comment. No trade
during New York.
Yes, during. I mean, we're not in New York session yet. You've still got what's it? 12 p.m. UK time. What's it? 8 p.m. Yeah, 8 p.m. Hong Kong time. So 8 hours. Yeah, 12 p.m. So it's noon right now. So we got 2.5 hours before New York opens. So we've got another 2.5 hours yet of. It's going to slow. You know, London's probably going to start slowing down, coming to an end. So I reckon we got about 1.5 to 2 hours of free trading left. You know, the last half an hour, especially as the New York session's going to be closed, maybe a little bit, just start slowing and be a little bit crappy.
Yeah. And
gone.
Specifically with that, the New York session is most definitely going to probably be very flat. Potentially, I think we've seen them for today. And it was during, on gold specifically, it was during Tokyo. Like, even though it's not a big move, that I think that's the move of today. The rest of the day,
it's actually during when I was awake as well. You know, like, I don't. It's not in my system to trade Tokyo session or Asia session. However, I don't want to either. I'm only here probably for 5 months. If I was going to move here permanently, which I haven't decided yet, if I was going to move here permanently, then I would start implementing an Asia session strategy. But I think by the time I feel like I've but by the time I feel like I'm comfortable enough to trade Asia session on my live funded accounts, I'll be flying back to the UK. So
I think it's still worth it for you to take one pair, even if it's just one pair, and get comfortable with trading the Tokyo session with its volatility.
Is he going to sneeze or cough? What do you reckon?
Sneezed. They usually come in twos.
That was a subtle sneeze, bro. I was half expecting like
me throwing my table over. No, I usually sneeze in two. So I just needed to wait for that second one to be like, are you gonna?
Yeah, no, yeah.
Speaking of euro, just to get back to that, like that little thing that I wanted to talk about quickly. For you specifically, because you are really narrowing your trading day to only like a very short period of time, and on top of that, it's very late in the day for you as well. So mentally, you might not be at peak physical, alertness. So maybe you see something, and instead of making a nice, good, well thought out decision, you may, make an impulsive one. So potentially, if you have another pair that you kind of like look at Asia session, which is a little bit earlier for you, more in the morning session, a little bit more alert, a little bit more awake, find a pair that you can trade for the next 5 months so that mentally and physically it's less of a strain. Something to test, at least, at the very least. Just kind of.
Yeah, I agree. I think it would be silly not to test it because we're traders. it's what we do. It's part of who we are, is to trade and test and look into new opportunities. So I think to not test it would be untrader of me. So I think I'll definitely look into it. Just going to have a quick shout out to this next comment. Scribble. Yo, what is good, my man? How you doing? Hello, new to the Fivers. Love it here so far. Big shout out to you, my guy. Thank you very much for the kind comment. Welcome to the Fivers family, my friend. Make sure that you have subscribed if you haven't already. Make sure you leave us a big fat like. Make sure you join the community as well. Go over into the Fivers website, get into the dashboard, and get yourself into the Discord community, where there's all sorts of hosts and all sorts of guys in there, not only trying to help you, not only trying to build a community, but also dropping some absolute atom bombs of gold and wisdom. So make sure you go over and check that out as well.
So in terms of EU,
yes,
if I'm going to analyze it from my perspective, we do have the open of the day, rollover with a gap. Gap was immediately filled. So to me, there's no guesswork in terms of which direction price wants to go. It's definitely a little bit more bullish based on that fact. Like the reaction at rollover or market open on Monday was to sell lower, which failed. Immediately went over into a buyer's market, started pushing price higher, and nice and volumetrically as well. Okay, we've had a follow-up attempt to try and bring price lower. So we've already tested the highs of last week, Friday already. So we've swept the lows of last week, Friday, and we've moved volumetrically out of that area. Very good sign of like a bullish nature. We've taken the highs of last week, Friday. We had an attempt to try and push price lower, which failed. And then we started pushing price a little bit higher along with Tokyo session, which is all very good. This is all pointing me more towards the idea of us wanting to go bullishly. Consider that we had quite a bearish structure pushing price lower last week as well. So in that case, this is now counter, but it makes sense because we've slowed down quite a bit coming into the end of the week as well. Even though we've had news events that have pushed the price lower over Friday and Thursday, the follow-up was very mediocre. You know, every time we had news, there was very, very mediocre follow-up. And even these two news events did not really do much in terms of like continuing this downward trend. So where we are now, we have a low, and we have a high, and we have a higher low. Unfortunately, we're not yet there to try and make a new higher high. So I think we're going to probably be quite subdued for the rest of today on euro. You can have a look at dollar and then at pound, and then we decide whether or not there's a bit of correlation. But we've already swept the high once. So Tokyo high was swept. Price started to push down, did not even come close to the Tokyo low as an example, and then had a little bit of a reaction here, but it's a reaction off of a dead spot, in my opinion. It's like there isn't really anything there to signify much movement, apart from the fact that it is on the 15-minute, this is a base. But the base had already been tested once already. So this is just a deeper base test. So not entirely sure whether or not this signifies bullish or bearish nature. As of right now, it's very, very flat for me. So it's probably going to slowly kind of like work its way up, but that is because of what I mentioned about earlier. So for me, I would be inclined to look for newer highs rather than newer lows. But I would not hold my breath. I would not go into this with the intention of, let's say, hypothetically putting a buy here with a stop loss over there, and then like my take profit trying to be at the high point over here. You know, I would not hold my breath for that, not for today at least.
Yeah, fair. I wouldn't hold your breath on any trading opportunities today.
Sorry, you were saying?
I said I wouldn't hold my breath on too many trading opportunities today, unless you're lower time frame scalp, very short term intraday trader. I really wouldn't be looking. So either side of the coin, unless you're a long term trader, like you're in trades for a couple of days, if not a week or two, or you're in and out within like half an hour at the very most, then I think if you're one of those two traders, then yeah, sure, traders per usual, New York session is going to be slow. However, if you're a little bit more like me, maybe Richard, where you're in a trade for could be anything from half an hour as a minimum all the way up to 2 or 3 hours, I really think today is not our day for trading.
Yeah.
Especially anything with a major pair.
And not on gold either. Gold is very flat. That the Tokyo London range on gold was 18. Not on gold, on EU was 18 pips. On gold, it's 14.30 per fine ounce. So very, very, very flat range at the moment. But
yeah, you only have to zoom out to realize that is flat range market.
Yeah, but it's the same idea as what we've had last week Friday, with the beginnings of beginnings of London session is a little bit slowed, and then we have some volatility that starts climbing in and then pushing price lower. So I don't think we're going to have this though today, because New York bank holiday. So.
Yeah, absolutely. I totally agree.
You want to bring your screen up and then we do GU?
Absolutely, my friend. Absolutely. I should be able to bring my screen up now. Hello, Will. Also, just want to give a bit of a shout out because I think I know who this is. First things first, Scribble, I will join the Discord. Thank you. You're very welcome, my friend. Well, like I said, welcome to the Fivers community. You're very welcome here. We're all very friendly, most of us. Rich isn't so much. I'm joking. Big shout out to this guy because I think I know who this is. Let me know if you want me to announce your name. If not, because I know you put AB trades, I don't want to go mentioning your name. However, hey Will, how you doing? Hope you had a good holidays after our interview. Never been on the YouTube live stream. What's going on so far? Dude, big welcome. I actually interviewed this trader. Very, very good trader. Absolute legend. So I want to give a big shout out to AB Trades. Welcome to the YouTube live stream. Not much going on at the moment in the markets. There's a little bit slow, but we're trying to do our best. We're trying to see what's out there. But make sure, AB, if you haven't liked already, make sure you smash the like button. Make sure that you subscribe to the channel and share it all over your social media. In the meanwhile, I am going to bring up the GBP against the US dollar. The cable under the water. Oh, wow. What flat? Woof. Okay, what's this? 5 minute. Okay, let's have a look at 15. Oh dear.
It's slightly bullish. Slightly.
You know what? Okay, I'll give you that. On the 5 minute, it's channeling a little bit more. Tell you what, let's identify the channel here as well. Let's mark out the obvious. Let's try and identify through higher highs and higher lows. Do we include wicks? Yes or no? Yeah, let's go wick highs. There we go. So now we are able to identify a range. Why are we able to identify a range? We've got a high. In fact, we've actually got a higher high. We've got a low. We've got a higher high again. We've got a higher low. Higher highs, higher lows equals bull trend. So low high, no. Yeah, well, I mean, technically, I suppose so. So low, higher low, nothing. We've not broken through this previous higher high, meaning that we've created a low and a higher low. So we are creating that uptrend. Now we've got a higher high and another higher high, creating the uptrend. In fact, let's actually get a trend line out. Creating this uptrend channel here. But what we haven't been able to do yet, there we go. Here is where we can identify that we've got a higher high and higher low. So what comes afterwards needs to be another higher low, creating that ability to identify that trend has failed to break below structure. Then we need to follow up with a higher high to show what? A continuation of the structure. So we need to show, or we need to see, there's a failure to oppose the structure and a continuation to follow the adhered to structure as which it is. So therefore we've got a high, higher high, low, higher low, failure to break. So now we can delete all this, which means nothing. All this because this also means nothing. All this because it means nothing. We can either delete this, even delete this, and this, and this, and this. So to keep a minimalistic chart, which is what I love a minimalistic chart, because now what we've already identified the previous breaks on the higher low, or the failure to break the higher low and cause a lower low. Now we've got the current high and the current low. Everything within is what I like to call elegantly garbage price action. What I mean by garbage price action doesn't mean it's absolute garbage. Shouldn't look at it. What it means is it's not necessarily the strongest or most relevant price action. It doesn't mean it's A+ setup material. However, does it mean that we cannot take the trade? No, absolutely not, because we've got consolidation here. Now, if we get a break and close below, we could potentially look at selling down to this low. If we get a break and close above, we can potentially look at buying up to this high. However, if you're looking for a high value setup, an A+ setup, a setup that you want to take, then you must be following trend. Because why? Trend is friend. You must be going with the flow. Have you ever tried to swim against a current? You go nowhere. If you've ever seen one of those posh swimming pools that they dump you in a swimming pool and you swim against a current, you're going nowhere. That's the whole purpose, is to train you swimming without actually sending you forward or pushing you back. So you've got an equal to opposite force, meaning you're going nowhere. So therefore, trend is friend. You want to go with the trend. You're not going to go jumping on your surfboard and going into the water. No, you paddle out, switch yourself around and go with the flow of the water. Then you jump up and do all your surfy boardy stuff. That was spoken like a true guy who's never surfboarded. I have actually surfboarded. A lot of my childhood was surfing. Surfing. I have surfed quite a lot actually for a few years, and I loved every minute of it. So, yeah, brain just decided to not brain then. So there we go. So think about it, surfing. We want to go with the flow of the wave. So here we are. We're paddling out. We've got to wait for this wave to come in. You see a nice little bump. It's a nice little wave, but it's not strong enough for you to say, yeah, I'm going to jump up on my surfboard here and just absolutely rip through some nice waves. No, this is a wave that you're actually going to go under. So it's a wave that you're going to break through. You're not interested in. However, when we see this break here, that's when we're going to be interested. Why are we going to be interested in it? Because it creates a new higher high. Now, that new higher high creation after this consolidation down here is an indication that price wants to continue further. That price wants to follow the trend. Now, that actually backs you up in the idea of higher high, higher low, higher high, anticipation for a lower low. So what do we want to see? A bit of a pullback. There we get our nice big wave. There we get our gnarly wave, which we can stand up and do all your surferboarder tricks on. So that's my anticipation. Yes, surf-of-order trades. So that's my anticipation for cable for GBP USD. However, let's assume a reversal is in place. Let's delete this level here. Now we've got this consolidation just down here. Now we've got this consolidation. What do we want to see? We see the little humps, the little bumps that we're not too interested in. However, we can see them growing. You know, so we're looking at these now thinking, okay, it's not garbage price action, but it's not price action that I truly want to trade. Why? Because we haven't broken this this higher low. We haven't created a lower low. So right now, it would not only be counter trend trading, but it would be counter trend internal trend trading. And what that means is it's the lowest probable setup. Doesn't mean it's not probable. In my opinion, in my trading strategy, it is the lowest probable setup possible. So therefore, I wouldn't be interested in trading it. However, maybe we see a bit of a pullback. May only be a little one. Doesn't need to be big. And then we get a bit of a move, and you're like, maybe you're FOMOing in, thinking, oh, I wish I took this trade. Oh my God, this was a nice trade. Or those who understand their strategy and trust their process wait for this level here to be broken. Why? Because once this level here is broken, we have put in our first lower. Now, once we put in our first lower low, we wait for a potential pullback. Or you can, again, depending on your strategy or entry criteria, you can either wait for consolidation, you can wait for a break and close below, you can wait for a pullback into a fib zone, a fair value gap zone, an order block zone, a base zone in Richard's terms. You can look for whatever entry criteria possible, but you put in a valid structural shift, which is telling you that trend may be changing. Now, we can either trade it from here, meaning that we can look at sells from this level here and get in on it early, or we can wait for a higher confirmation of a continuation. Now, what I mean by that, it's securing the idea that it's not just some liquidity sweep, it's not just some FOMO or false breakout, it is a trend continuation. And how we identify that is waiting for one more lower low. We've got a low, pullback, internal, no one cares. We wait for the official lower low of the overall trend structure shift. And we wait for a pullback when most would be entering. We wait for one more shift. Now, there is a risk that you are going to miss the move. However, the chance that you're going to confirm that the trend really is changing and heading in the course of direction that you want to be in, which is a sell in this case, you are increasing the probabilities through understanding that we're putting in one last lower low. Then you can look at trading it through your entry criteria. So that is my analysis on GBP USD.
I like that, Will. That's pretty good. Sorry, I keep wanting to sneeze. Like,
I'll be honest with you. I can hear you muting because you know how you get a little bit of fuzz, like you get a little bit of background. It just goes silent. And obviously, because like I said, I haven't bought my second monitor yet, which, however, I think I found one I like. I haven't bought it yet, so I haven't got the stream up here or like up there, and then my trading here. I haven't got that yet. So I'm having to I've got the entire stream, and then I switch it for then my trading software. Now, every time I hear it go deathly silent, I'm like, I've lost Wi-Fi. Oh no, I've lost Wi-Fi. And then I come back. Oh no, he's just muted himself. It's fine.
I'm sorry, mate. Like I don't know. Like I don't know if it's because of the wet weather and whatnot we've been having.
Don't apologize, man. You sneeze. As long as you sneeze over the camera, I don't care what you do.
Just like a little nasalness, just a little. And every now and then I want to sneeze, and I'm like, okay, mute. Just mute it quickly, just in case. Nothing's happening. Okay.
Dude, I was awful. When was it? 2-3 days ago? I felt so sorry for CC. I was there laying in bed, and I was like, because I couldn't breathe out my nose, and I was lying on my back, and I'm a heavy breather, but I'm not a snorer. I don't snore. I don't think. No one's ever complained about me snoring. However, if I'm ill, everyone complains about how heavy I breathe. Like I would be like, people were probably thinking, what the hell is going on next door? But my nose was so blocked. It was just as pure mouth breathing. It was awful. And then like on stream, trying to talk, I was starting to get out of breath. I was like, oh my God. So yeah. Like, so don't apologize about sneezing, man. It's winter. We've got winter flu and winter bugs going on.
It's summer for us.
Is it? I thought it was winter. Oh no, it is for you.
Two hemispheres,
Wait,
my friend. Two hemispheres.
Wait, so does that make it summer for me right now? No, it doesn't. No.
No,
Summer.
no. It's hemispheres. The northern
Yeah,
hemisphere,
it's still winter.
southern hemisphere, or
Yeah.
opposites, winter and summer. No, you're still in winter, mate.
I'm so yeah, we're still in winter. Hence why it's like even Cece is surprised that it's 23 degrees. Like usually, like she's in a jacket.
Do you want to
mean,
bring gold up, mate? Because I see
Yeah.
there's a few people asking about gold.
Absolutely, my friend. Let's have a look. Oh, there it is. Ooh, look at that beautiful currency. Oh, look at that. Look at that savage price the other day. Absolute savagery. Oh well. Stupid news. Stupid times. Stupid everything for making me forget that news is 1:30 p.m., which is like 9:30 at night. But of course, because I had 9:30 at night in my head, I was like, I'm in a gold trade. I don't care. No. It was 9:30.
There's news coming. I'm like,
Asia, not 9:30 at night. UK, my trading brain time. So, mate, I was fuming. I got back after having food out on the balcony with my partner. I got back and to a notification from like my news bot saying that news is out in 10 minutes. That was 20 minutes ago, just to be in like $700 drawdown. I was like, no, why? So I was fuming.
Yeah, mate, that's horrible.
Dude, I was not happy.
Gold has been a bit strange today. So Barcelo and Irchafana or Irchafanai. I'm sorry if I'm like really mispronouncing your name. I am so sorry. Gold is a little bit flat at the moment. As you can see from Will's chart, it's not the greatest of price action. Yes, we had a massive gap after a very slowed, let's say, week last week. New all-time highs, but like it's all-time highs, little bit of a pullback, all-time highs, little bit of a pullback, and it kept doing that same action the whole of last week. So the gap is a concern because it means that over the weekend there was some sort of information that came out that directly impacted everybody's opinion of gold. But what is more concerning to me is the fact that there's no follow-through. So gold had a gap and immediately went into consolidation, which to me means uncertainty. So massive gap, usually volatility is supposed to follow, straight into consolidation. That's uncertainty. So even though we've been very much bullish over the longest period of time, I don't know whether or not this amount of uncertainty is going to like really push it as volumetrically as we want it. So I would say be cautious when trading gold, because when you're trading consolidation, if you are a breakout trader, then obviously you want consolidation and then a breakout from it. But if you are a reversal trader, consolidation can be a killer because it might fake you out in a direction, thinking we're busy reversing down and then reversing, and then it's just not so. So when it comes to gold, I would be very careful. I would probably look at more of a intraday scalping strategy on gold right now, rather than.
I think you'd be very brave to I don't know. I'm really not sure. I
Thing
don't
is,
know what to say about.
if you have the same idea of like gold is bullish and has been bullish for the longest time, ergo that means it's always going to be bullish. I'm just going to do buys. I think that is setting yourself up for a big failure should
Certainly a very disappointing or unwanted surprise in the markets. Yeah.
should it
100%.
decide that now it wants to start going into a bit of a retracement phase, which it does do when it reaches all-time highs for a while. So with gold, I do think that we can come and test the new all-time highs, which is 4,690. Now, last week we were talking about gold, and I said I can see us reach 4,700. Maybe not this week, but the week after. I mean, we almost touched it literally on day open on Monday. So I still think that all-time highs is in play.
Yeah,
At the very
I
least.
think so.
At the very least, I think for today, bar the fact that we have dollar bank holiday, maybe tomorrow, I think there's a good chance with the volume that comes in with the New York session that we can definitely start like making all-time highs a bit stronger and touching a little bit better. The problem is still this big gap, this absolutely massive gap is still very concerning because there's orders sitting there that just were just not entered at all. It just sits,
Yeah,
it's just,
just not respected, entered, or considered even.
or those ones that were entered at a poor position. So whomever is in that trade
Maybe.
would be looking to get out of those trades.
Which
So
would then, again, supply and demand.
probably push price a little bit lower. But this is all hypothetical. This is all hypothetical because as of right now, it's just all sideways. But that to me means that there's no real buying consensus and there's really no selling consensus right now. It's very much sideways. We're waiting for reaction. So Diva saying going to go up. I mean, everybody will probably agree that gold is going to carry on going up. It's just super slow at the moment. The question is when. The question is, are you going to be correctly positioned, ready when it starts?
I think part of me thinks that
to be before it starts going up. Those are questions. You can't just say, it's going to go up.
Yeah, I think part of me thinks that a lot of people are getting on the bandwagon of gold's definitely going to go up. It's definitely going to go up because it has gone up. And it's gone up previously, and it went up a significant amount as well. When I predicted gold was going to go to 4K in Q4 last February at the London Trader show, I think it was. Yeah, it was the London Trader show, and I was actually speaking with institutional traders and what do you call them? Like futures. Are they futures traders? They're like personal account futures traders, like big boys. And they were asking me, they're like, "Will, as a retail trader, what's your opinion on gold?" I said, "Yeah, 4K by Q4," and I gave my reasons for it. And I said, "This is what I think is going to happen." So I got so much backlash. A lot of retail, like all the institutional guys were like, "Okay, interesting." They didn't give much away. Very conservative people, very much didn't want to expose their thoughts too much, but they were happy to give what they were happy to give away. Does that make sense? Like they were very much like, I must say this, but I'm not going to give away whether I think you're right or not, because obviously, they can't say either, but maybe they have a bit more knowledge than we do. Now, a lot of retail traders were like, "Oh, Will, how is this? How is that even possible? Never going to happen. You're full of crap. This, that, and the other." Next minute, Q4, I think it was quite early in Q4 as well, like mid Q4, gold hit 4K. Now, gold hit 4K, everyone's like, "Wow, gold to 10K. Yeah, it's easy to say it because it has happened. You've got to understand that. Why is gold going to that price? Why is gold moving the way it's moving? Is it are you saying gold to the moon because you're jumping on the bandwagon of what gold has done in 2025? Or are you getting on the bandwagon of gold going up because you have genuine analytical reason to do so?
Yeah.
And I think that's something that we've got to be very careful as traders, not to make ourselves look like we're just, it's not FOMO, but joining in with the crowd, you know?
Yeah, bandwagoning.
Yeah, exactly.
Because, but I don't think anybody in chat is like bandwagoning. I
No.
just, the idea of saying gold is gonna go up, seems like a no-brainer. It really does. But it doesn't just go up. It's got retracement segments. It's got consolidative segments, and it's kind of like positioning yourself well enough for when it starts to push up again that you get in A, at the best price, and B, you're ensuring that you're not at that point in the market where everybody's like, you know what, let's step off the gas. Let's start selling now. Because yes, in your mind it's like, okay, it looks like we might be, getting ready to start moving price higher. And everybody else is like, I'm gonna wait. And then you're gonna sit with a silver issue. Remember with silver, people bought at like $60 years and years and years ago. And what happened? Everybody said, oh yeah, silver. Looks good. Looked good for a long time. It's flat. It was flat for a long time. So you don't want to get to that experience where it's going to go up. Yeah, it is going to go up. Well, let's not say at 60. I think it was like at 30 or something. But like the same idea is there, that they were like, okay, cool, we're going to get close to 30 all-time highs, and we were stuck in 30s for years. So it's the same idea. So in terms of everything else, I see somebody was asking about US 30 as well. US 30.
I'm just gonna show this a little bit, and then I'll move back over onto yours if you want, mate, and then you can drop down USA. What do you think? Awesome stuff. So I'm just gonna chat a little bit about this. Now, we've already covered this, but what I've done here is I've literally just labeled it out with arrows, just to hopefully make a little bit more sense on what I'm seeing. So now we've got this price action here. I don't like this. It's very internal. You know what I've just spoken about with GBP USD. However, if we get a break and close above, there's a chance that we can pull back and then head up. Now, that's slightly more probable than the idea of it breaking this level here and just rocketing up. So we've got three options here. We've got break and close, continue, which I'm not too keen on. As you can see here, not too keen with this one. We've got this one here, which is slightly more probable, in my opinion, where we break and close, pull back into this consolidation that we've had all day today. I say that as if it has been all day. Morning, UK time, and then a continuation up. Or we have the idea of a break and close above. Now, what this looks like on internal structure, this is the 15-minute. What this looks like, it's not going to be a straight line. I know I draw straight lines, but they're not. The price doesn't move in a straight line, So yes, okay, I may draw straight lines from A to B. Don't think that I think it's just going to be straight line. We could consolidate, we could channel, we could dribble, we could rocket up. Who knows? We're going to move up into this area in hypotheticals. So move up, break and close above new all-time highs with momentum. And this is very much important in the word momentum. I don't want it just to go blah, 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 new all-time highs. I want it to be boom, 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 all-time highs. Let's go, pull back, go. There's got to be oomph. There's got to be momentum. There's got to be push and movement in the market.
Is a good word.
There's got to be conviction. So, and then a bit of a pullback, maybe a retest of the high of the all-time highs. I know that gold does like to retest all-time highs. So I personally like this one here. Break and close above all-time highs, pull back, test them, continuation upwards. That is what I personally like. Due to the gap price, this is probably more likely to play. Either a break and close below this level and continue and just move on down, or break and close below, pull back, retest this consolidation of today, and then continue on down and fill some form of this gap. Doesn't mean fill it all, but try and fill and retrace as much of it as possible. So that is my gold analysis, my XAU USD analysis. I just wanted to bring that up real quick. We'll move straight over onto Rich's screen now, and he'll take a look at US30. But that was my analysis with gold.
I like your analysis. I do.
Appreciate
US30. US30 has been incredibly bullish. A little bit more so, in my opinion, than US or NAS has been the last while. So this is NAS. We're still making higher lows, but we were also making these lower highs as well. So we were a little bit more confined like this. So we're making a flag, but this is on NAS. On US30, it's not entirely so. US30 is very, very bullish and has been very, very bullish for
quite some time.
months and months. So we're still very much in this upward trending channel. This is on the daily, by the way. So very, very clearly bullish. Very clearly. So when we're talking about pre-New York NAS and pre-New York US30 and pre-New York AP 500, generally you have a little bit of a slowed directional movement in the beginning of London session or coming out of Tokyo session. So just to give you an idea of what that means. So this was a while ago. I had already pulled up these all-time high, or not all-time highs, but like these high points that were tested. This was the 7th of January. We've continued to come and test that one now recently, as well as this area of interest that I had, which was this was from the 12th of December. We have a high, we have a reach after we've had downward pushed, even though this is still overall still very bullish. You have these microstructures for like within the week, within the month, and that kind of. Anyway, so we eventually broke through this area of. We failed a first retest, didn't really test it, but then a second test was pretty good. Problem is, this test led to a either an equal low or a slightly lower low in relation to this high over here. But still, this area is still in play. So price can potentially come back and test it. Now, in this case, it just didn't. It missed it completely. The first time it tested it, and the second time. So the third time, sorry. So this was the first time it tested it. It failed to reach it. This is the second time it came tested. It failed to test it as well. And it seems as though right now we're also failing to test it as well. I've got the MACD here as well, just to kind of like show you as well on the daily how the momentum has shifted and when it has shifted. So in general, you have a downward push into this area of interest, and then you have a volumetric spike out of it. And that coincides with what you're seeing on the MACD as well. Same idea. Slow trudge down, though we didn't meet it completely. We did have a reaction, a bit of a flattening, and then another reaction as well. Now, the way that I'm seeing it right now is we are still between these 2 points. This is on a little bit more on the lower time frame because, like I said, on the daily, we are still very much bullish, still on this like upward channel. From the 15-minute onward, you can see that we have a little bit of a consolidative section. So this whole piece over here is basically the consolidation. Now, it's a large consolidative range. It's like $500, almost $600 consolidation. I'm going to sneeze.
Just going to sneeze again. There it is.
Man, it's got such a long wind up. It's just like... Okay, there we go.
Do you know there's nothing worse than the build-up of a sneeze to just not happen?
It's like a tease, mate. It's like a tease.
No.
Anyway, so still a large range, but what we're seeing, if I go back to the hourly, what we're seeing is we are seeing a reaction off of the same area it's been reacting off since Wednesday the 7th. Okay. So we're seeing the same reaction. We're getting down to a point which is very close to, if not at the same area as where we've reacted already multiple times. So we've already had a singular reaction, and look where we are. We're in London. We're in the London session. London session is a turning point where if we were slowly moving in one direction, then we have a volumetric movement as we get towards New York. Now remember, this is also a news event. Same thing here. Slight little movement and then a move down. Slight little movement, then a strong move down. Slightly stronger movement down, but then a strong move up. But now consider that this is like in the middle of the range. This is like between these 2 points. So it's like almost as if it's jumping off of a premium area. Like it's now just below midpoint of this channel or this range, and then we're going to try and buy up from the midpoint. So there you have that reaction. But right now, I would say if I take the very last candle before price started pushing back up again, we are at it. If I go back with it, it is in line with all of these other ones being tested. So I think pre-New York, considering the fact that we have a bank holiday today, I don't think that we're going to have this crazy volumetric movements as we had over here. I just don't think that that's going to happen. What I do think, however, is we are going to attempt to test this gap. Some way, shape, or form, we're going to make our way slowly but surely into it. I don't think it's going to be today. I think it might only be tomorrow, with tomorrow's New York session being in full force again. For today, I think we're going to have, if I go down to the lower time frame, I think we're going to have this slowed upward tick and then a turnaround, a little bit slowed downward tick, and then another attempt at a slow upward tick. That's what I think is going to happen today, because the whole day has been slightly consolidative. During the whole Tokyo session, we had up and down, and then flat. An attempt at a break, straight back up to test again the top, back down again to test the bottom, into a flat, and now a try to push back up again. So I honestly think it's just going to be super slow going into the New York session, unless you have some sort of like strategy that maybe relies on selling from that point over there or buying from this point over here. A very low time frame, short intervaled. I'm just going to be in this trade for an hour maximum. Other than that, I would honestly wait for tomorrow, because New York session.
I like that, man.
That's
New York session,
the biggest players are for the U.S. stock market.
Yeah, exactly.
Are really, really, wanting to be traded and want to be looked at, and you're not that at all, in my opinion.
Yeah, I like that. I totally agree. Having a quick catch up with chat. Do apologize, guys. We did drop the hang.
Just take me off of screen for like 2 minutes. I really.
Yeah, no, that's fine. No worries. Well, Rashad goes to unblock his passageways. Let's have a bit of a catch up with chat. Excuse me. Oh, cool. Looks like we're all ill. Oh my god. The Fivers team are ill at the moment. Where is everyone? Someone who's not ill come in. DJ, was good, my man? Long time no see, mate. How are you doing? Greetings to the highly esteemed William D and Richard B. Hope you're all well. No cap. Well, come on. You know Richard B is super friendly. No cap. Richard B. Rich is super friendly, man. I was only winding him up. he's an absolute legend, and truth be told, a really, really cool guy. I'm saying this all because he's not here right now. The moment he comes back, I'm going to get straight back into trolling him. But big shout out to Rich. He's an absolute awesome guy and a very good trader. And he has always got my full 100% respect as not only a trader, but as a friend and a co-host as well. Like I said, do not tell him that, though. I'm only saying that because he's not here. My name, Scribble, no, not your name, man. He was a guy who I have just gone straight past. AB. I don't want to get it wrong. I'm pretty sure I know who this is, but I don't want to get it wrong. Let me double check that. I'm sure. Adam, it's you, innit? I'm sure it's Adam. I don't want to get this wrong. I don't want to be like, oh, hey, Adam, what's good, man? And then you'd be like, bro, what are you on about? Adam, it's not Adam. So I'm pretty sure this is Adam. So if so, big shout out to Adam. Yeah, happy to announce markets have definitely been a bit sideways. So sorting in trades a little bit more, using more market structure. Awesome stuff, man. Yeah, that's really cool. New Narnian material, ask Lewis. The voyage continues. Sorry, Clipper, I'm not sure what you're actually referring to there, man. Smash that like button. Now, that's one thing I do know exactly what they're on about. Give us a big fat thumbs up, everybody. Let's see if we can get 200 likes. I reckon we can easily get 200 likes before the end of the stream today. So make sure you give us a big fat thumbie up. He is back. Hello, Rashad. Just
well, hello.
How much we hate you, actually, to be fair. But talking about how much we hate Rich, talking about how much we love the stream, though. So make sure you do give. I'm joking, we won't actually. We all love you, really, Rich. But make sure you give us a big fat thumbs up on the video. Come support us here at the Fivers community. Make sure that you subscribe and you share with every single other person that you know is interested in trading. And even if they're not interested in trading, we have a bit of banter and we talk about all other things as well. So make sure you get them involved. Time to a cheer and make them watch.
I like that. Oh man, I feel a lot better. Woo.
Seller take their eyes open so they can't look away. Please help me. I got a warning on Gmail for bulk trading, but they disabled and terminated my account as soon as I got the warning. Someone please help me. I'm in a lot of trouble. I passed the account with a lot of hard work. Bro, unfortunately, I do not have the capabilities of that. Neither does this very handsome devil down here. However, someone who does have the capabilities to help you is the support team. So make sure you go over to the Fivers website, go chat to their support team, and they are super helpful. They will indeed guide you in the correct direction. And I hope everything does get sorted for you. Vinny, what is good, Vinny? How's it going, my man? Long time no see. Will and Rich, what's good, guys? How's your January so far been to you guys in terms of returns and pairs that have given you the great returns? What's your plan for the rest of the month? Rich Hard, I'm going to throw this one to you, my man.
January so far has been pretty good. In general, the start of the year is usually the most difficult for me because it's that idea of coming out of the December markets and you're trying to do what you did last year and it doesn't always work. So beginning of January really is a slow start for me. In terms of which pairs have been giving me good returns, I've been solely focusing on NAS as my only trading asset. So NAS has been pretty good for me. In terms of the actual percentages, I'm not going to divulge that. But for the live stream account, NAS has been decent for the month as well. So one loss at the beginning of the month and then a few winners to get it back to 2% up on this account. So overall, it's been decent. In terms of percentages, I think I'm up on this account maybe slightly more than 0.3, maybe 0.4%, somewhere around there. One of my other accounts, I took a massive loss, much like Will's gold trade of the other day. I have a different trading pair for that specific account, and that one just absolutely got smashed with the NAS trade, because I was doing a different style of trading. So I trade one account only Tokyo, only London session, one account only New York session, just to make sure that my risk kind of is not, I'm not over risking all of my accounts. So my personal account has been going, my stream account's been going well, and then I have two other accounts, and those two accounts kind of like took a bit of a dip. But those are the New York session accounts. But it's that's like normal for January for me. It's just January is just going to take a little bit of time. February starts, start getting results during February, so it's all good, mate. All good.
Yeah, nice. It's very similar with me. January, I'm pretty sure has been a losing month due to the fact that I lost $700. Otherwise, it'd just be break even. Let me have a quick look. Let me go custom period. Why did I go to bloody 1970? I wasn't even alive in 1970. Why?
You weren't even a
stupid
thought in 1970.
Oh, yeah, bro. Literally, I wasn't even a thought. Bro, even when I came out, bro, I wasn't even a thought. Joking. Right, let me have a look. 20. What are we now? 2026, aren't we?
Yeah.
26. Janvier. Let's go first to current. $670 loss. So yeah, only due to the fact it would have been a break even, it would have been a no trade month technically, but I took a bit of a hit last week. Now it shouldn't have been a $700 loss or a $672 loss, but we all make mistakes. We're all human, not robots. Unfortunately, sometimes I wish I was, but we're not. So that was just it. That's just unfortunate, and I took a bit more than I should have. But I mean, we took a $670 or $672 loss this month. It's not the end of the world. It is what it is. It happens. The month before, I think, was around about break even. The month before that was around about break even. The month before that was fantastic. The month before that, fantastic. So they say a lot of traders make up most of their trading profits within within a couple of months. The rest of the time throughout that year is just a fight for break even. So I think that's what's happened with me is September, October, November was absolutely fantastic, and then no, it wouldn't have been. It would have been September, October was fantastic. November, December, January, I think it's just going to be a fight for break even. And then hopefully going forward, we can start making some more profits. But we'll see. We'll see how it goes. We're not going to rush it. We're just going to trust the process and just keep trading as we're trading. But other than that, my January has been really good. It's been super stressful, super ram-packed. I've moved country. So as you can tell, I'm still trying to, design my office background. So we're just, trying to deal with staying at break even and staying at sort of where we are within the markets. I'm not going to go swinging for gold. I'm not going to go trying to get some massive return over the next couple of months. Probably March time onwards is we're really focusing back into getting some good returns. I think January, February is just going to be me trying to settle in to this new country and trying to understand what this is going to look like for my trading.
Awesome, mate. I just also did the same thing now on this live account of mine, the live stream account, and I'm up 0.48% for the month, even though I started the month with a 0.25% loss. I've had like little like snippets here, very, very small scalps as well, but in general, still going well on the live stream account. Same thing. Just
Yeah, give me 2 seconds. I'll be back. Give me 2 seconds.
no problem, mate. So it's the same idea of what Will was talking about. It's there's no rush. There's no point in rushing. If you're going to rush, you're going to make mistakes. And the idea is to always try and keep to something that is not only achievable, but it's at the same time, it's also it's easily manageable on your psyche as well. So HXCKY saying, how do you feel about NASDAQ? Well, we went through NASDAQ earlier. I don't know if you were here for that, but NASDAQ, if you go over to the daily on the NASDAQ, we've had this very strong upward push for the majority of the year. And then as we started coming towards the end of the year, November, December, we reached basically all-time high. And then we had a very deep pullback. So we swept a low point, which is good. It usually, like, you know, you're going up and you're gathering a bit more ammo. You know, you're gathering a little bit more buys and then getting in a better price and it starts pushing price up. We had the low, but instead of us breaking all-time highs and, you know, just absolutely going to the moon, we made a lower high. We made a higher low. And then we made another lower high. And then we made another higher low. And then since then, we've been doing this sideways game, which, in my opinion, was what we were going to be doing for a while, at least. I don't know if anybody were following us, but I had this ascending and descending channel portion marked up, saying that as things are going right now, as things were going up, we expected there to be some sort of break, push price higher, retest and continue, and it just didn't happen. We had a semblance of a break of the channel, and then a rounding, and now an attempt to push lower. So with NAS right now, personally, I think it's all weighted on the stock market right now. The stock market is today is not going to have any impact whatsoever on NAS because the stock market's going to be closed. So it's a bank holiday today in the US. So for today, I would say sit on your hands. Don't bother trying to trade anything on NAS because you're not going to have that input. You're not going to have that directional movement to push price in one or two directions. And on top of that, we had a massive gap round about this crossover, which is it's interesting to say that because that then means that there is this potential for us to come and fill this gap, and then where do we go then? Do we start pushing lower? Does this mean that we're now going to start entering a downward spiral on stocks, on NAS? It can happen. Will it happen? I don't know yet. We'll really have to wait and see. But that's the thing about January as well. Like, January to me is a very difficult month to trade in general. And because I'm focusing solely now on NAS, I still want to see how the majority of January plays out. So other than that, I think it's a waiting game for me right now. I see also Job is saying, listening to you here makes me realize I am not so bad. I just need more funding.
I literally about to say, I love that comment, man.
Yeah, so here's the thing. Will, you always try and make, or you try and aim for 2% a month. And in general,
1% a month is goal.
Yeah,
really.
Like in general, that's a very, very good aiming point. Mine varies depending on which strategy I'm using and on which account. But I wouldn't say 5% is out of the wall. One of the account and the other account, I would say 2% is doing well, you know. So 5% for the one account is great. 2% for the other account is great as well. So in your case also, Job, the
It
thing
depends
is,
on.
it's always relative. 1% is 1% is 1%.
Yeah,
Whether
yeah,
it's 1% of a 5K or 1% of 100K, you're still always looking at 1%. So if you
yeah.
need
I absolutely love it. Like,
yeah.
yeah, it's one of my biggest goals. Like when I read the comments and listening to you here, it makes me realize that I'm not so bad. Like, amazing, because that is one of my biggest goals, is to help realize, or to help other traders realize the possibilities of trading when you're not listening to these guys telling you that you should be making 10,000% a month. It's not realistic. Like you'll see people in Lamborghinis, and they may earn those Lamborghinis, and they may be buying these Lamborghinis earning £30,000 or dollars a month. Fair, they may be, but that may only be 1% a month for them. That may only be 2% a month for them. However, the ones that are driving around in a Lamborghini saying you can make 10 grand a month on $100 account, it's like, oh, bro, no. Like, come on. You can still have great risk management and still have a huge amount of capital. Yes, it's going to take you a while, but a slow horse for a long journey. This isn't a sprint. You're in this for life. This is going to be your career. Get it done. Think about those low returns. Think about those just steady chipping away at it. Think about the snowball effect. You roll that snowball, eventually gets bigger and bigger and bigger and bigger. No different to compounding. It's all about understanding what works for you. So every time I see a trader with a comment like this saying, listening to you guys makes me realize that I'm not so bad, I just need more funding, it warms my heart, because that is genuinely my goal. I want to show, like, I'm traveling the world. I've been to 4 countries in the past 12 months, about to go to my 5th country as well in a couple of months' time. Guys, 5 countries in less than 12 months. And you don't see me trying to get 10%, 20%, 50, 100% months. 1 to 2%. Solid goals, solid returns. That's what it's about. That's what success looks like. You can live the life you want to live. Guys, I drive around in M4 competition, which I'm not driving right now. I'm in Hong Kong. I'm in a complete different part of the world. My M4 competition, my big, all bells and whistles convertible M4 is sitting in a garage. And you can still have a luxury life. You can still spend. In fact, just not long before tour in France, I bought my first ever, and like people are gonna go, "Oh, your first ever?" Yeah, my first ever. I didn't buy a Rolex at 10. I bought my first ever luxury watch a couple of months ago, and I've been trading for 7 years. So it's a journey, it's a process, guys. Don't be making bank straight away. Take your time, enjoy the process.
So that also Job just asked, and what you answered, great. Also, great, by the way, mate. Directly follows up by Mirinda Filyun saying, "How do you make a living only making 2% per month? Breaks my brain." That's because people always look at the dollar value. You rarely look at the percentage, and you think, okay, I'm making $1,000 this month. Oh, I can't make a living because it's only $1,000. Consider, is that $1,000 that you're making on a 5K, or is it $1,000 that you're making on a 100K account? Okay, so if you only look at it from a percentage point, and then on top of that, you also consider your living standard and where you are in your life and how many of these accounts you have. Consider this. If I have one account and it's a 100K account, the expectancy is that 2% on a 100K account is $2,000 a month. And then, does 2% sound horrible? No, it doesn't. If you're living in South Africa and you are making $2,000 a month, you're doing fine. Genuinely, you're doing fine. All right? They don't take percentages at the grocery store, mate. Yes, but it's the way that you approach it. You're only looking at
hope
it from
so,
a
man.
dollar point of view, and you're thinking, oh, 2%, it's impossible to make a living with 2%. 2% on 100K is $2,000 a month. If that is not your only
You
income,
imagine, I know a lot of $1 million funded traders. I know a lot of $1 million funded traders. What's 2% of a million, Rich?
why would it even matter? It wouldn't matter.
Can you take 20K to a grocery store? Last time I checked, you could.
You can, but what's the point? What's the point in looking at it like that?
Exactly. So like, if you look at it this way, institutional guys, you go to the JP Morgan building, and you go inside the building, they talk percentages, they talk growth. You go up to a rooftop bar, which I was at a rooftop bar looking over the JP Morgan building, they talk percentages. The only time traders of like institutional traders, the only time people who genuinely understand the market, the only time they talk about figure value, dollar value, is when they're talking to someone who either doesn't have a clue or they just want to look good. It's the only time.
I mean,
The
fair.
rest of the time, their language is percentage value.
Yeah, the thing that I'm trying to refer to here is the idea of, if you look at money and the value of money, you're going to struggle as a trader, because you're only ever going to look at P&L. You're only ever going to look at, I'm making $1,000 per trade. Congratulations, you're making $1,000 per trade on $1 million account. Okay? Or you're making $1,000 per trade on a 100K account, or you're making $1,000 on a 20K account. There the percentages start changing. Then it's a completely different game. The same dollar value is not the same across those accounts. But if you look at it from a percentage point of view, what you're doing is you're creating a baseline for yourself upon which you are not looking at P&L. You're only looking at the idea of, if I make 2% in a month, good. But consider this. How much are you risking in order to make that 2% for the month? That's another thing that you need to take into consideration. So Mirinda is saying, okay, I think funding companies make it exceptionally difficult, especially requiring between 8 and 10% passing a funded account. I make 2%, or Will makes 2%, but his risk is 0.25% per trade, as an example. So he can scale that up if he so wanted, and he can easily make his 10% in a month. But why would you want to? Why would you want to make 10% in a month when you can do it a lot slower and you can do it a lot more consistently? So even if you think that they're making it difficult asking for 8 to 10%, it's not unreasonable. It is definitely something that can be done. It's a lot better now because they've removed the timeline. They've removed the you have to pass within 30 days kind of like thing. That was a lot more difficult if you had to pass a funded account, make 10% in 30 days. But now these days, it's unlimited. It can take you whatever time that you want in order to pass an account. So it's not unreasonable, I think. Hello, Victor.
Well, hello there, handsome.
Hi there, everyone watching. You guys, gentlemen, interesting conversation you're having, and I thought, hey, I want to be a part of that conversation as well. So, what is the starting argument?
We were talking about what was our current going into the year percentages and how was our accounts looking, and if there's any assets that we were looking at specifically to try and build it up. And Will and I were talking about our percentages for the month so far. And then Mirinda Fulgun said, how do you even make a living only making 2% a month? And then we were trying to break it down to the sense of it's relative. The percentage is relative. And you have to always look at the account size and then based on your living standards and all of that kind of like stuff. And then if some people mentioned, you can't take a percentage to the grocery store, which it's the kind of mentality that's like you're very money orientated or you're very P&L orientated, which is where the conversation kind of like drifted more towards.
Ah, I see that. And someone said you cannot make a living on only 2% a month. Is that correct? Did I even
No,
was
the
that said?
question was how? How do you even make a
Okay.
living only making 2% a month? Breaks my brain.
Okay, but that's easy to answer, right?
Yeah.
And the differences between taking absolute amounts, right, instead of percentages. I mean, they're for different reasons, right? The
Mm.
percentages is for comparison. Percentage is a comparison, right?
Mm.
Compared to 100%. It's for meaning it's for analysis. It's for understanding what's happening. What's the one amount or one performance. It's completely for a different reason. I think that's very fundamental. Um, and I would say. How do you make a living with making only 2% a month? That's easy. Just have a large enough asset under management. Very very easy. Just increase your capital under management, and 2% will be plenty to live of for the whole year sometimes. But yes, and you guys' argument was any different?
No, not really. Maybe we just took a little bit longer to get there. You summed it up beautifully, Victor. So maybe if we're in like 5 minutes earlier, it would not have seemed like I was ranting, which I wasn't. I wasn't at anybody. I just wanted to say this as well. Like Marindo also is like, if I may ask from your perspective, what is the risk you typically take per trade that is deemed safe? I do understand the percentage point of view. Awesome, Marindo. I really sorry if it sounded like I was like hammering. I wasn't. I really wasn't. In terms of what I consider a safe trade size in terms of percentage, I generally do not really go higher
Rich,
than 0.5%.
I'm gonna have to stop you there real quick. Can you guys hear me? Okay.
Yeah.
Yes, we can. Loud and
Yeah.
clear.
Okay. Right. My Wi-Fi's been really bad now, so I'm gonna drop off for the evening. I'm gonna love you all and leave you. I can't hear or understand a single word you guys are saying. So unfortunately, I'll just watch it on the YouTube. But unfortunately, I'm gonna have to jump off now. But guys, thank you very much for joining. Make sure that like I said, make sure you give an absolute massive thumbs up to Victor coming through now. He's going to be dropping some absolute values of wisdom on you guys and knowledge. So make sure you subscribe, make sure you stick around, and make sure you do smash the thumbs up button. And I shall see you all tomorrow. Thank you very much, guys, and I shall see you then.
Cheers, Will. No problem, man.
Hasta mañana, Will. Hasta mañana. See you tomorrow. Rich, you were answering the the question, I think.
Yeah. So personally, 0.25% to 0.5% is adequate risk for me, and that is based on a few variables. First and foremost, the account size that I have with the amount of.
I love this. Go ahead.
Allotted. Sorry, yeah. Did you want to say something, Victor?
No, I think there's a little deal wanting to say something. You already saying something. So, but go ahead, finish your sentence. I'll come in later.
Oh no, sorry. It's just I think there was a bit of a delay between us because it seemed as though it caught up now. Because you spoke like very, very, very quickly suddenly. So I think maybe there was a little bit of a delay. So I apologize if I interrupted you, Victor.
No apologies needed, Rich. You're I know you have the best intentions and always a gentleman.
That's awesome. Thanks, man. Yeah, so I'll do it. I'll say it very quickly. It depends on the account size and the amount of drawdown that I have available on that account. If I have a 10K account as an example, and I only have $1,000, I will only still risk my 0.25% or my 0.5%, and then whatever percentage I make is the percentage that I make. But that, how do I come to 0.25% or 0.5% is also based on my back-tested results, knowing how many trades do I lose consecutively, how many trades lose in general, do I have, how long is my longest drawdown period and stuff like that. So that's how I came to the 0.5%, 0.25%, bracket, basically. So I tend to stay in those two, jumping between 0.25% and 0.5%.
That's an awesome question, by the way, by Marinda Viljoen. A very, very important question to be asked, because we always, right, you can't trade without taking a position, and that position has a size. I mean, there's no other way around it. It's a characteristic. You're bound to have a size. So what size is the adequate one? It's a very fundamental question that everyone should have asked themselves and answered in a methodical, hopefully, way based on actual argument. Not because you saw someone on YouTube saying 1%, 2% of whatever. Are you trading the same strategy as they are? Do you have the same stats? Do you have the same drawdown? No, you don't. So you shouldn't be trading anyone's position size because they said so. The perspective, actually, let me see. The question was, what is the risk you typically trade? If you ask me, Marinda, the risk that I typically trade, I always trade. To give you an idea, my main strategy takes 1% of account, not the actual equity or balance you see on the account, is the distance I have until my max loss on that account. If it's a new account, then that would be, of course, 10K on 100K. So I'll take 1% of that amount. That's my typical. That's the one that I use always for my position sizing. And if you convert that, which I don't, but if you convert that in comparison to the actual account, to the balance, then it's 0.1%. And why do I take that? It may sound very low, very much lower than most other people. The reason is, it's because of what I said. It's based on my max drawdown. I know what my account is historically, and based on that, I choose my I will in time. I do. It is still controllable. I don't get panicked because I know in advance, okay, when it hits my max loss, that means that I'm a couple of percent.
Victor,
Which is very comfortable. Go ahead.
Sorry to interrupt you. I'm just noticing on the live stream that you are breaking up a lot. There's gaps. Yeah, I don't know if your internet or whatnot is a little bit janky, but it's reflecting on the Victor is lagging. Yeah.
Okay, let me go take my screen off and see what I can do in the background, because it may have to do with I'm using my computer, my home office computer, for the first time in weeks. So let me double check that everything is working as it should. Hold on, I will be right back.
Awesome. Sorry about that, Victor. I just I thought maybe it was myself, maybe it was my internet, but when I had a look at the live stream, I realized my side seems to be fine. So while Victor is just quickly having a look at his internet and his computer, just to make sure everything is perfect for us to carry on, is there anything that you guys would like for us to have a look at in the meantime? So Suresh is saying, do you use 3 to 4 strategies or focus only on one strategy? Myself, I have a 1 strategy per account kind of approach. So I have 1 account that I stream with live, which is this one currently. And this one has 1 strategy that I'm following and only 1 asset, and also only 1 time during the day. So I only trade this account live on stream, and it's only during the London session. So I have a few other accounts as well that I trade during the New York session, maybe same asset, so maybe NASDAQ as an example, and then based on that, I will have a different strategy for the New York session as well. So 1 account, 1 strategy, 1 asset. That's my approach. but it's not everybody's approach, and it's not necessarily the approach that is going to be the best for everybody. So generally, I would say get comfortable with one, maybe two strategies. Get comfortable with one, maybe two assets, and really dive into those assets and those strategies, and then get so comfortable with them that you can see immediately on the day whether or not it's a favorable day for your strategy on your asset, or if it is not a favorable day for your strategy and your asset, and then you can move on to something else. So don't feel like you have to have one asset and only one strategy. What I would suggest is don't hop between strategies all that much. Choose one, do all of the back testing that you can, get a very clear picture of what the strategy can do for you in terms of its win rate, in terms of its expectancy, in terms of its risk, its consecutive risks, consecutive losses, consecutive wins, and so on. And then see whether or not you can replicate that on a demo account after you've done backtesting. See if you can replicate that for a period of time. And then see whether or not you can, in the moment, see whether or not it actually works. Is it something that is causing you stress when you enter a trade? Like you might have a strategy that is a bit more of a swing style, but every time you enter the strategy and you go to, or enter the trade and you go to bed, you can't fall asleep because you keep thinking about the strategy. So that's just something that I think can be added onto that as well. So just don't hop between strategies. At least give one strategy the opportunity for you to get comfortable with it and for you to see whether or not it is actually a strategy that works or doesn't work. You'll come to notice that doing backtesting and doing forward testing, which is technically, taking a trade on a demo account as you would have had it been a real account, as an example, and then documenting that information, and then see whether or not that lines up with your backtested results. And more often than not, you will realize that your backtested results, if you're doing it manually, backtesting results is going to have a discrepancy. There's going to be a bit of a gap between your forward testing and your backtesting. So just something to take into consideration. Uh, 404 Dream is saying, nice technical support from your prop. From I really love your technical support. I will always trade with your prop. From I love yours, due to the fact that you love the support. 404 Dream, we love that. That's awesome. Technical support from our support team is very important to us because it means that for us, there is that gap between those that are following us and joining us and working along with us, and that gap gets smaller because we cannot, as the live stream people, connect with everybody. If there's a technical issue, the technical team is going to be the ones that really dive in. And I believe that our technical team is absolutely top class. So love that comment, mate. I really appreciate that. Cheesesteak saying, bro, how much worth of time do you need to backtest the strategy? It's going to differ from person to person. I think that a strategy is going to be backtested for months, and you're going to adjust and you're going to play around with that strategy and you're going to look for the ideal entry point. And then eventually, after, let's say, a year, you would probably be like, okay, I am ready to really trade this strategy according to what I've seen. The exact number is going to be difficult. I might say, hey, listen, you only need 200 trades, as an example. Someone else might say, hey, listen, you only need 50 trades and then you're good. I personally think that you need to give the strategy enough time so that enough of the market, enough variance in the market has played through. See whether or not your strategy works in December during low volatility time frames. See whether or not your account or your strategy works when there is tumultuous periods like high war or geopolitical strife. Look when there's a pandemic. So see where your strategy works and where it doesn't work. And then once you have that data, then I would say carry on. I don't think that there's specifically the right amount of number of trades for you to backtest in order to say, yes, this is a good strategy. I just don't. So Capital Rice is saying, boss, kindly explain NAS 100 chart technically. Okay, so on a technical level on NAS, if we just take today, let's just take Monday, which is just today. We've started the day with a bit of a gap. So over the weekend, there was some geopolitical news that came out of the US, as well as from the UK. There is some tension, let's put it like this, between America and some of the countries, Venezuela, Greenland, and the US, and then Iran, and so on. So there's some political tension. Okay, so we start this morning with a bit of a gap. Now, this bit of a gap is not unheard of. If you've had rollover, it kind of like makes sense. But in general, it's usually people reacting in a panicked way, let's rather say. So you have a bit of a gap. So what we've had since that bit of a gap is a very slowed downward ascent. Very, very slow downward descent. Okay. So how do we see it's going downwards? Or bearish. What we can see is that for the whole day, if I just remove that, for the whole day, if this was your high point of the day, the whole day we've been slowly and steadily making lower highs and lower lows. So every one of these black lines is a swing point. Each one of them falls in line with our current direction. So if this is the high, and this one over here is the low, this is a lower high, lower low, lower high, lower low, and so on and so forth, the whole day. Okay, until we have now made the low of the day itself. So this is the lowest point that we've reached. So I always look at the previous movements up until the most recent structure. So for the most recent structure, what we have is, if I remove all of this previous ones and I just look at the most recent two swings, most recent two high swings and most recent two low swings. So sorry, let's just have a look here quickly. All right. It seems as though everybody is having some network issues at the moment. Remy, as well as Victor, is having some network issues. But I'll keep you guys company. All right. So if we just look at the most two recent swings, this is on the 15-minute right now, because if I go on to the hourly, I need to account for the gap, and I don't really want to account for the gap because I want to see whether or not it's going to get filled. And that is going to play a role in whether or not price action is going to adjust. So I don't want to account for it just yet. I just want to purely on what has been happening apart from the gap. So this is the most recent high, and this down here is the most recent low. So if I had to reference these 2 points, the current price right now is making a lower high. However, we have these micro swing points down here where price tried to push lower but failed. So every time you see that, something like this, either slowing momentum or it's changing direction. So if you just go on today, That is the high. There's a low. It's a lower high. Technically, that is a higher low, but it's not much of a swing point. But you have a follow-up lower low, lower high, lower low, and so on and so forth. So we're starting to get to a point now where we're not making those follow-up lower lows anymore. So if you just look at this strong momentous down push that we've had, it had zero follow-up. When it did have an attempt to try and push price lower, it didn't. It couldn't push lower. Price instead tried to push a little bit higher. We have a very, very recent higher that got taken. Price tried to go down lower, failed, once again, made a technically a higher low in relation to this low point down here. Okay. Once again, price then started pushing up, trying to break that most recent high swing as well. But overall, the whole of the London session today has been bearish. So lower high, lower low. So that is the high point. That is the low point. This is a lower high point. But if you look at it from the 5-minute point of view, you'll start seeing that it's changing its character ever so slowly. You see it on the 15-minute. You see that when it's trying to push lower, every time it fails, where previously every time it pushed lower, it technically made a lower low. So right now on the 5-minute, it seems as though we've come to a point where price attempted to push lower and failed, and now we're slowing our momentum and starting to slowly pick up a potential reversal. This is, by the way, this is only on the 5-minute, so only looking at it from right now. We have a high swing here, another high swing over there, and yet again another high swing. So technically, if I had to compare just this area over here, let's not talk about that high point up over there and this low point down here. Let's just focus on this little section over here. We have a low, we have a high. We currently have a higher high, a higher low, another higher high, another higher low. So in terms of where price is currently operating in the last 2 hours or so, we have been in a slightly bearish channel after a slightly bullish channel, my apologies, after a strong bearish channel. So this could be the changing of direction, trying to push price bullish. We will only know once the most recent high swing, or the stronger high swing, this one up here, has been broken and tested, or tested and broken. So I'm saying that price is going to generally make its way, break that, retest, and then continue. Then you can start looking at the higher time frame to say, yes, it's in line with that. But like I said, we have a gap, a massive gap. And in general, gaps tend to be tested at least, and maybe even filled. Whether or not that's going to be today or later in the week, we still need to see. From a more technical point of view, let's just kind of like step back and say, remember that today is a bank holiday in the dollar. So it's Martin Luther King Day, which means that what volatility and volume we had during the New York session is going to be severely reduced. Maybe not necessarily the volatility, but the volume is going to be reduced. So with volume being reduced, we will probably not see a lot of movement when we come into the New York session. Or what we will see is we will see a sudden spike and then just follow up by consolidation. So from a technical, on the 15-minute, we are slowing our downward descent, and it looks as though we might be positioning ourselves for a potential bullish character change, trying to push price higher. On the higher time frame, it's a little bit more difficult to say, because we have this converging channel, and then on top of that converging channel, we've had attempts at breakouts, and we're way lower than that attempted breakout to push price higher. So on the higher time frame, we're a little bit in the middle. We're in an area where price is probably waiting for really high impact news or absolute confidence in its directional movement. And right now, we don't have any of that whatsoever. So NASDAQ, for me, technical point on the low time frame, slightly turning bullish, or at least we're starting to show potential of a bullish shift, which would then align with us trying to test the gap. However, over the whole day, we have been quite bearish. So we're quite a bit lower than where we started the day. Stretch saying, another Trump D-dump day. Buckle up, Buttercup. Yep, it's one of those days. Martin Luther King Day. I'm assuming he's going to have a nice little speech today. So that speech is most probably going to be followed up by a lot of volatility in the market, but not from the US itself. Not because of the US banks and US investors. It's probably going to be from the Canadian or maybe even from South America side. Maybe just the last remnants of the London session itself. Victor, can we test whether or not it's a bit better now?
I think I know the issues, but I don't think I have. I don't know. Maybe I did solved it completely. So yes, how is it now? Should be, finger crossed. Should be better.
Okay.
No,
Let's.
looking at your reaction, I would say not really.
No. I was sorry. I was looking at the YouTube stream itself, not just our stream information here. I was having a look there just to see whether or not it was still lagging, but I needed to give it time because there's a delay. So I was just waiting for it to happen. It seems a bit better.
Yeah, let's see how it goes. I think it should be getting better any time now, but I think there are two things that are two issues that I know that might be the cause. Maybe both of them are the cause, but I just have to wait for them to clear up. We'll see. But Richard, you are. Let's see. We have David Pedrini has a very deep question here. I often hear that statistically there are fewer systematic or profitable scalpers. Is this true? Rich, what do you think of this?
I honestly have no idea. I don't have the data, so I think
exactly
it's going to be a little bit.
That's the correct answer.
Yeah.
I don't have the information to say one thing or the other.
Yeah.
Because you gotta know the profitability of many traders, not only. And I don't have that information. I mean, yeah, I wouldn't be able to say anything about this. But very good question. I like that, Davida. There was a few questions that I was fixing my issues, my connectivity issues. I heard, and I thought, hey, I want to answer this as well. So let's save them for when I come back. So now I'm back. How much time should you need to backtest your strategy? Is the question. Whatever
sorry.
it.
Sorry, before you carry on, I need to jump out.
Okay.
So I don't want to carry on interrupting you, just so that I would like to allow you your opportunity to have the stage. So for everybody who hasn't already yet, please consider subscribing if you're not subscribed. We're trying to get to 100K subscribers this year. It is the Fiverr's 10th anniversary this year as well. So it would be awesome if we can have 10th anniversary along with the 100K subscribers. You guys can only imagine the giveaways that's going to happen. It's going to be legendary, in my opinion. And then, if you haven't already, also please drop a like, and then consider sharing this this channel with anybody that you think might be interested. And even if you don't think they're interested in it, send it to them in anyway. Be a little annoying and get them to come and join us. Victor, I will see you tomorrow. I hope that all of your streaming connectivity issues today are sorted out. Our producer Remy is also struggling with some connectivity as well, so it might not necessarily be just you. It could be that there might be a systematic issue as well. So just so that you are aware. All right, guys. Have a great day, Victor. You have yourself a lovely day. And I'm also happy to see that you're back home, back at your old reliable, comfortable trading setup. So it's good to see you made it home safely.
Thank you. Thank you. Thank you for those best wishes. Yes, after a 12-hour flight, I had I slept like a baby afterwards. Ooh.
Okay, so what kind of baby? Like a toddler that kicking and screaming, waking up halfway through the night, or a very drugged baby, that, I don't know. What kind of baby are we talking about?
The newborn baby that just sleeps through it all with.
Oh, okay. All right. Makes sense.
Yes. So, all right, Rich.
See you guys tomorrow.
The 4th. See you tomorrow. Bye.
Goodbye.
Were a few that I wanted to go through and give my 2 cents, if that's okay with you. Please let me know if there are any interruptions or if I'm lagging as I was before. I did fix a couple of things that I think should clear things up, but sometimes it's not even me, it's or my PC. It is, either connection servers. I'm not sure. The platform, the streaming platform. Sometimes I've noticed that as well. So let me double check a few things here on the chat. Before we go to the ever so interesting EU for our analysis, because today is a great day to be looking at EU and grabbing these opportunities we have. Let's take a look. If you have any questions, just let me know in the chat and I'll do my best to answer them. Answer them to the best of my knowledge. Uh, Let's take a look. All right. So someone asked that I was just about to answer this about the, how much time should you is needed to backtest the strategy. The amount of time is dependent on the strategy, of course, how complex it is, and how much it takes to take one trade in that strategy, and then you have to multiply that with a couple of hundreds, in my opinion, of trades to really know for sure that your system has an actual edge that you can trade, not just something that is a fluke, a little bit of a beginner's luck that seems to be profitable, but in the long run isn't. And so it depends on the strategy. Some strategies will, for example, my strategy will take a day for me, right? So it's a long time, a full day to backtest 2 weeks, 2 weeks of day. So you can calculate how much I need for, let's say, a month, a half a year, and so on. And um, how much it depends on the strategy. So depending how much time, how many moving parts it has before you can take a trade on the strategy, and how often these are. Let's say another question. We had a few. I think they are. If I go back, yes, I like this one by Suresh. Do we use 3 or 4 strategies or focus on only one? You want to be able to do one first and do it well. There's no need to do multiples if you're still struggling to with your strategy, with your consistency on the very first strategy that you're putting out there. So there's no need to expand that. So currently, I now trade more than one. But for a long time, I only traded one strategy because that was what I could handle and still keep my consistency, keep my compliance to the strategy, to the trade plan. And so at the beginning, you want to be focusing on only one. That's my advice for as long as it takes until it gets so boring that you can do things without even looking at your notes. You know exactly what to do. You can almost do it with your eyes closed. And then you might think, okay, now I have some mental space. I can add, perhaps depending on how much time each one of them takes, I can add more strategies to the to my daily routine. And whether or not you join them or use them on the same accounts, that depends on, you know, on your risk management, right? Depending on the max drawdown of each during the day, during the lifetime of the account. And then you can say, all right, maybe I need to adjust the existing strategy to give the new strategies a little bit of drawdown possibility as well. Or I don't want to, I want to keep them separate because I know exactly one is very stable and the other one is kind of new. And I still have to gather data, for example, on it, and I don't want to be risking the account because of just one component, which is hasn't been backtested long enough, yet. So you want to have, if you have enough information, then you would want to use them together, because capital uh, given to you, if both strategies are, even if they're not very profitable, but they are profitable and steady and constant and solid, and you combine them, you'd be using the same capital for perhaps here, right? If it's just doubling the drawdown, then you might as well just use one, because it's still profit. I mean, risk adjusted profit would still be the same. The idea to combine more strategies into the same account is to increase the risk adjusted profit. That's the whole idea, right? The net result after any period, a day, month, or a year, without increasing the max drawdown, or the relationship, the ratio between net profit and the max drawdown you incur during that year or period. All right, let's take a look at. Maybe I should zoom out a little bit. I feel my screen is a bit too. Let me zoom out a little bit. Yep, I think that's a little bit better. Maybe a little bit more, something like that. Yeah, sure. Let's do that. Okay. Okay, so let's take the chat, and then we can go to the charts. Marinda, talking about, I think this is the beginning of the question we had before at the beginning when I came in, about percentages per day, per month, and so on. Um, Marinda saying, I normally break my brain if I don't make 5 to 10% per day, which is actually, well, I don't want to say absurd, but it's way too much, way too much. I can doing that, but on most scenarios, that's way too much risk to be taking. I mean, if you are in a competition, perhaps that would make sense, right? Or something of a where you have to, really push it to make a chance to win the competition. But I mean, on prop firm account, it's not a competition, and on real life, same thing. You don't want to be risking this much in order to make 5 to 10% a day. You got to be risking a lot typically on any strategy, and that's not great. That's not good. You're going to be having drawdowns that will surpass the max loss or daily drawdown limits on any prop firm. So you'd be losing accounts left and right all the time. 2% per month, I think that's much wiser. But the the percentage of P&L you get per month shouldn't be, a goal on itself. you should be asking yourself, what can my strategy do? Looking back at the historical data, what can it do safely in terms of drawdown? Um, and that is the number you want to be trading. Whether that's 0.5%, that's 5%, 2%. I don't really care, without saying to without sounding disrespectful. I don't care. Whatever it can sleep perform, deliver to you, even if it's just a little bit, even if it's 0.5% a month or less than that. You just stick to that. Stick to the safely delivered profit of your strategy, and that's it. And be content with it. You'd be happy. I mean, just keep on. I know it takes a long time at 0.5%, but imagine if you can just keep on keeping on stacking prop firm accounts on and having a steady 0.5% gain per month. It's gonna take a quite a long time, but eventually you'd be sitting on a large capital base, and 0.5% will not be so little. So the important thing to focus is not the number of the percentage, but the consistency, the robustness of the system, and being it's safe, the risk, right? So that you can trade it months in, months out, year in, year out, and that will be all right. I think the lagging has improved. If not, let me know in the chat, and I will take a look at what I can do. All right, so let's take a look at the likes back here. Let's take a look at the likes for our stream. I'm checking that on the background. Let's take a look. Rami, how are you doing? Rami is our producer in the background. Um, let's take a look how many likes we have. Of course, on our there we go. All right, so 175 likes us. It is all right. That's a nice number there. I think we can hit 200. What do you guys say? 200 for the before the end of the stream, which is in about 1 hour. Let's see that. All right. Okay. All right. So the let's take a look at the markets. Gold, perhaps. Gold has had an opening gap this Monday, first day of the week. You have an opening gap. That's because of all the tension within NATO states. What I mean by that is, of course, uh, you know, the Trump against his other allies about the Danish territories, of course. Let's take a look at. It's been a very nice break and retest, right? You had a break of this breakout of that structure or that high. Let me mark that. And then we had a retest and continuation. That's a lovely price action right here. Break, retest, and continuation. It looks like the market is, of course, the gap is in that continuation, that follow through lag. So I suppose you know it's still within everything above this line. That breakout line is can be retested, but the momentum is on the buyer's side frame. That is on the H4. What can we see on the lower time frames? The H right here, we have that gap we just talked about. The gap is quite visible here at $31, which is not. Let's take a look. We don't have any bearish or any structures to start strong, holding up that consolidation after that gap. So things are looking very stable. Bullish. The buyers are holding up quite nicely. Personally, I would be interested in this the order block right here. Although it's not an outside bar, but this year it's not even an order block. To be fair, it is not, because the close is not above this high, and it means it's not an outside bar. But still, that area would be interesting to me to look for. On the majority of the price feeds, this is the area that I would be still looking, even though it's not an outside bar, for price to come back and retest out of it, right? Meaning going higher. And this will be the area of retest, the test of the market, whether or not we're going to continue this push, which is most likely the push we had before, for the continuation, or we're going to be retracing back. Okay, so let's let's check this. All right, let's look at EU. What do you say? EU from the monthly time frame, and then maybe GU as well. What do you guys say? All right, so we had a fresh order block. Let's start with that, which is on the monthly time frame. I'm not going to go into the details, but it's reacting off of a monthly structure to the left, and the pop or the reaction that we expect from the order block, which is that area that was created right here with this movement, is a reaction, right? It's to the downside, and we've seen it. Price came back to retest that order block, and retests and moves had a reaction. On the weekly, we did not get a weekly structure created right here, as it will. There are no alignments, so we need to wait for the monthly to align with the setups on EU. The daily time frame, we are at I'll show you why that is. We have a one, which is the bearish quasi, right? That's the left shoulder, neckline, the head, and the possible reaction that we were expecting, which eventually indeed happened. So that quasi, is completed when we hit this line. So you have a quasi at play, yeah, in progress to be completed. Kudos to those who caught that move. But on the other side, we have another reversal pattern on the daily as well, which is the bullish one, which now has two structures that it might react upon. And one of them, it already had that little pop, but eventually broke it. I left it in there so you guys see it, that it's one of the two in the reaction it had on it, but now it is on the second one, the last one. And it may or may not hold in through time. We'll have to wait for that. But the reaction is very clear, it's very obvious. So the market is reacting on a daily structure, which goes all the way down to the 1st of October. So it's a long, many bars in this pattern, making it very strong. And so the thing that we should be looking for, it's going to be a today close, I mean, is above this line. To me, it's a sign that the buyers have come in, they have reacted from a relevant place, and I want to be going long from this level. Whenever today's close on EU is above this level, the level right there be 1.16088, I want to be long this. How far? Initially, the initial area is not that tool. The initial area, the first trouble area is the immediate right here, which is a daily order block right here. However, you can understand that that's not a lot at all for price. It's already almost reaching it. I would still be looking for for price going to the next order block besides this one, because this one has been already taken out and the market is reacting very nicely. What I would be interesting to look for is whether or not it has retested the order block that it's creating right now. It hasn't created it, but it's most likely to create an order block. What you could see is a push through it without any retrace. But if it is going to retrace, then I want to be going long from the order block just created for my idea. So you could be taking off trades if you were already in the trade, your profit, some of your profits on the bearish structure here, but I would be waiting to put on some more whenever we come back to this order block, if and when we retest this area. All right, let's look at the lower time frame to pinpoint the area. We had the open, and there was an opening gap that has already been closed. Let's see it right there. Yes, okay. So the opening gap, right, that would be the H4. That creates the outside bar. And this would be the area for our the alignment between the daily and the 4-hour. The market is looking quite nice. So it's going to take some time for it to come back. And it may not come back very quick. That's fine as well. No problem at all. You could be taking trades from this order block, this fresh order block, as well as it is going forward into the daily bearish. That's perfectly valid to be doing. And on the 2-hour, we have the same quasi giving us the same area right here. So that means to me that, let me double check something here. Yes, that means to me that we could be taking, actually it's a quasi as well. This is the neckline for the quasi right here. Don't forget, guys, hit the like button, subscribe to the channel if you think this is helpful for you to, cement your trading skills. That's the quasi. That's the reversal pattern of price coming into a entry order block, bullish on the daily. Let's take the 1 hour, and the 1 hour is giving us a refinement, but the 2, so it's I would still go with the 2-hour. This is the area to be traded, and let's measure how big that is. All right, there. All right, so this is the area. Let's measure it. Okay, so that's 20.6, and the daily ATR is 49. That makes the area too wide. Okay, so that means that I need to adjust it. It means that I would need to wait for price to come to the extreme or form a new structure. interest if and when price comes back, and the area which is overlapping before, but it's too wide to be used in my opinion, according to the the rules that I trade by, and I need something tighter, and that can only be this H1 right here, or a new structure after we hit the H4 in the future, right? So if it does something like this and gives us another order block here, let's say on the H1, perhaps an order block something like this in the future, then that would be the area of interest. So currently we only have one, which is the head of the reversal pattern, the head of the quasi, but that's the only area we have on on the whole pattern. And on the H4 that we talked about, let's see if we have structures that can be used for today. Let's measure that. Right, and we're talking about the 15 pips of width. That's enough to be traded. Yes, that is enough to be traded. So we could be using that as well. Let's take a look at H1, and I like, well, the whole area is tradable. To be fair, 15. Let's mark that as well. Okay, so these are the areas to be traded, and it's because of its being fresh, and both of them, right? So we need to wait for price to come back to retest that before you can take the trade long there. That is, let me mark this, and we can continue with our analysis. So we have on the 5 minute, let's take a look if we have some areas of interest based within this area, right? We have two entry areas. This is one, and the other one is much tighter below us. And let's take a look. So the quasi is, we already had it right there. That's an area of interest. And that's the only one, at least on the 5 minutes. So we would be waiting for price to come back to this area, put a alert on it, and be alerted every time price comes back to retest this area. So the area, the idea is that either below this order block, or let me mark this, or below the whole area, the whole head, and you target the areas above either the daily order block, and you can hold some for the continuation if there is one. That would be a good area to be getting in. And if you feel a bit more adventurous, if you have more confluence on the market being a bit more impulsive and going for higher levels for today, let's take the daily ATR to measure what it's been doing. Daily ATR is running at 63, which is above ATR. Yes, it is. So I'm targeting much more than what I just mentioned isn't exactly a good idea. Okay, so having a target much further than above this daily ATR, this daily structure, this berry structure, is not, it's not a high probability trade for the short term. You want to be getting your targets being hit right after, with a good probability within the daily. This is already expanding beyond the 100%, but because we had that opening gap, because we have been so bullish today, it's not at all unconceivable that we would be reaching that. And in a case like this, I would actually put it, because there's so little difference between a little bit in front of that daily order block and the high we had today. I would just put it at the high, because the market would likely just touch and react off of it. You want to have your trade ready, already out by that time. So that would be one trade. You could put it below this low or a little bit lower. That's up to you, how you manage your risk. The better place, or not better, but the safer, more conservative place, is all the way down here as price comes back and pushes to go higher places. Be aware that this needs to happen before London closes, because otherwise there will not be enough momentum for price to push through the last couple of hours of London, and certainly of Asian. As with Asia, more often than not, it wants to retrace and push back a little bit in the direction of the mean, and the mean being lower than where we are, since it's being a little bit impulsive. All right, so that's EU. Let's check the chat. All right. Okay, let me double check here. Okay, so let's look at perhaps GU, see if we have any. If you guys have any questions, let me know and I will respond in the chat. Let me take. I'm pending for your questions, everyone. All right. Okay. All right. So let's look at GU on the monthly time frame. We have on this pair, we are reacting off of a fresh order block, which is the first retest. We talked about this not long ago on our Discord community. This is the immediate retest, but the actual daily retest is the first one. Is after we left the order block, not the daily, the monthly, and this is only now. So we are still on the first retest in my book, and we should be looking for the reversal or the drop, the reaction off of this monthly, and that's the current candle is showing a bearish candle, so that is as expected. Let's go to the weekly. What do we have on the weekly time frame? Let's take a look. We did not have the low of this is 0.1, the close is 0.2, so there is no outside bar on these two candles, but it looks very, very bearish indeed. As you can see, almost a outside bar, these two. And this order block is, too old for that's 6, 8, 10. Yeah, that's not fresh at all. So we don't have anything on the weekly, nothing recent, nothing useful. There isn't a quasi on the weekly, only on the daily. And that's it. Yeah, let's go to the daily. There we go. Let's go to the order block, and we have a break of this daily, and we have a bearish order block that should be used as targets if you're going long. What else do we see here? This is obviously gone. We have the market creating a bearish one, but it is against the current momentum. Let's mark this as the daily quasi. This will be the left shoulder head neckline, and we mark the top of the structure all the way to the bottom of the pattern, and we don't have anything for this bearish quasi, since this order block on the daily time frame is below the 50% retracement. That means that this is just a regular fresh order block, but should not be used because should not be used as an entry order block on the quasi, just as a fresh, meaning after a couple of bars being created, we should. But it depends on your cutoff value. But you could have your value a bit more sharper, less than 10, and that means so we do have a supply area above that hasn't been retested yet. Or that's quite interesting. That means that the market is still breaking those bearish structures. So let's clean that up on our charts, right, and create a new possible reversal patterns as we have seen here. This is already gone as well. Market creating, uh, breaking all these bullish structures, making it quite a bearish sign for the market to, with what the direction of the market could be, right? If the market is breaking bullish structures, bullish order blocks, and quasi structures being printed, then that's a very strong sign what the market wants to do. It's a cue, it's a sign what the market wants to do, meaning going lower. So you should make sure that the reversal patterns that it creates after such a bearish sign are solid, are in confluence, are multiples, not just one, because the market previously was telling us that by breaking all these bullish structures, the market is wants to go much lower until it hits something that makes sense on that time frame, which is in this case the daily. Hasn't really reached it yet, to have a convincing reversal as it has on the EU. EU did have the daily order block being retested, right? Be below us. Look at that on EU, right? You had the price retesting the order block, the daily entry order block, but on GU it hasn't, right? So you want to be you if I see this and I have on both on EU and GU, I have a long signal, and let's say I have to choose. I don't have to choose personal, but let's say I have to choose one of them. Let's say I'm you, and your rules say you only take one of them. If I see the daily and I see that the EU has reached a bullish, is reacting, is building the reversal off of a daily structure that has been hit, and GU hasn't, then that's a strong indication which one is likely to have a bigger move bullish, right? Doesn't always happen, but you're basing on stats, you're basing it on probabilities. EU in this case has a better chance of a much bigger move to the upside. So on H4, we are having market is showing a bullish reversal. It is a quasi on the H4 with a very clear entry order block on this quasi on this H4, and that would be the area. Yep, that's the possible entry. And looking at, I think this is too wide for the same as with with EU. The area was too wide. Yes, that is too wide. So that means that even though there is an outside bar here on the 2 hour, I will not be able to trade that. Not according to the my rules. I only have the head of the reversal as a possible area of interest, and I will have to wait for price to come back and hit it and create. If you don't understand exactly what I'm talking about, then why. There we go. That's one, and this is the other one. Yes. All right. So I would be waiting for price to hit that head or come back at a later time and create some structures on some lower time frame. Let's say the daily, not the daily, the H1, H2, for me to be able some reversal pattern within this order block for me to know in advance, where can I take the trade long, and that would be something like this, hypothetically because it hasn't happened yet, but that would be the area that I would be looking for price to push higher, and if it hasn't hit this order block above here, this one, if it hasn't hit it yet, I would have my target at this or this area. But if it has gone up, before going lower and taken out, even if it hasn't taken it up, but it has already, bounced off of, it has used this order block in the past before going down. Let's say this happened a little bit later, right? Then I would, target the next daily structure, right? We'll have to go back and see what is the next daily structure. We only see that on the daily, and there isn't any. So I will target in that case this high or that high. Okay, depending on ATRs and the momentum of price. So the target depends on whether or not we test this daily or this daily structure or not. We tapped into it, we consumed some of it volume already, because if we did, then the probability of the price going through it, since that would be the second retest, is bigger. Okay. All right. So that is GU. Price is quite strong, as we're seeing here. Is there any other trades? No, there isn't anything here to me on the H4. This move is nothing that I can trade. So that will go back to EU and wait for price to hit that area that we just talked about on the 5-minute. Maybe I can look at some other pairs for you guys if you want me to look at that. Let me check. I'm gonna check here on the screen. Let me check on. All right. We have later on today, we have Discord having a session. So if you wanna interact with more traders from the Fifers, you wanna talk to them, you wanna see their screen as they trade, then come to our Discord community. Our Discord show is will be live in about an hour and the 15 minutes or so, and are all invited to participate in our Discord session. How to get in? On your hub account, on your dashboard from the Fivers, you can get your link to the Discord community, and it's free. It's completely free. You only have to have an account with the Fivers in order to be part of it. All right, let me double check here in the background to see if we are. Let's see. All right. We have what is the like right now? How the number of likes? We have 188. Come on, guys, 12 likes, and we hit our target for today, which is 200. It's a safe target. We have 30 minutes for it, so let's see if we can hit that. That's a good thing. Let's check here. All right, perfect. Let's continue then. Let's look at gold. We have a trade for gold for today. I know there are many gold traders in the audience always. We have on today, we have no high impact news, as we already knew about it. Bank holiday for US pairs, and it doesn't mean that the market will not move on these holidays, as you can see with gaps and impulses, but you want to know about them for sure. There are, let's take a look here. We do have, okay, so I'm looking at there are high impact news on the Canadian dollar CPI. I think that already happened. Yes, that already occurred. Yes, it has. Okay, so there's nothing left for our session. Let's take a look on gold then. H4. There is nothing on the H4, no structure to be traded. So let's look at some other. Yeah, that's on H2. That will be the area. Price already tapped into it. We mentioned it before. You want to be trading long from this area, right? That's the trading long from. And that's exactly where price came back. That area, right? We highlighted it before, and it's for a reason that we did that, because that's the area where the buyers last came in, and you would expect price to have this reaction, even if it's just a pop. You want to know in advance, because that's exactly what it is, what it does a lot of the time, and what it's doing right now. Likely, like that. It wasn't a 5-minute structure. It's based on the H2, so I wouldn't be able to trade it based on my main strategy, because I need the H4 to play along as well. But the 3-minute was very precise. Look at that. Right? It wasn't on the 5-minute. That's why you need to use multiple time frames, because sometimes the pattern is not visible on the 5-minute. Right? Sometimes it's only visible on the 3, on the 2, or the 1. And the market doesn't have to accommodate to your time frame. You have to look for the time frame that the market is moving in, right? And in this case, it was the 3-minute that would have. I didn't catch it. I didn't trade it. I was talking to you guys and making the top-down analysis on G on EU. But there was a clear area where to be taking this trade. The quasi neckline was here on the 3-minute. This is the head, the left shoulder, and the quasi can be just as simple as this, right? Lower low, indicating the established downtrend. Of course, the trend is much older, but this is the smallest part, and that would be the top of the structure. And we had the reaction. There was anything, right? Anything in this leg beyond the 50% retracement for market to react. Only this order block, and look at how beautiful it reacts. And the ultimate, not ultimate, but on this time, ultimate target for this area would be for this reaction is the top. However, any of these structures are, this would be the ATR to be taking out. If you're on a lower time frame and you're scalping, I would just take it from this area right here, which is a 3-minute entry, or not an entry, a regular order block, not an entry, just a regular 3-minute, like so, right? To take off your TP from this level to that level, but eventually this is the TP. And if you're using higher time frames, there's nothing on the H4, nothing on the H2, and actually nothing on. Actually, there was a already tested area of on. So that could also be used. It's a retested area, so it's a second retest for that area, meaning it's not a great target, but it's a target nonetheless. Meaning, if you are, you would be putting your targets at the top of this order of this pattern, or above, just below that order block, recognizing that the market does react. Look at that, react, leave that pins. Look at that, leaves that pins. You want to have your target in front of that. You don't want to be testing, pushing your luck if you're only looking for this kind of a move. Okay. Let me double check. Here is 61, while the ATR is. So they're still about at least 10. And it's a holiday, bank holiday, so you need to adjust that a little bit. But if you ask me, I think there's still, possibility for price to expand the current. That would be this target to be hit. That is still within. As the market is slowing down, you might adjust this expectation. But I think, it's not out of the question for the market to continue and hit something higher. Let me mark that, something higher on for today, meaning this isn't exactly out of the question, right? It's pushing it a little bit, but there's plenty of time for price to, it's gold. Gold can have another run, and this isn't too much to ask, right? Reaching this high. So I would be, this is not a H4 base structure, so that makes it a little less probable that it will be expanding and using the reversal right here. But hey, if it's showing and it has multiple hourly structures telling you this, then I would look. It's an H2 and H1, multiple hourly structures telling you that market wants to reverse from here, and it may not succeed at it, but it is in the direction of the move. So you know who's to say that it's not going to go and retest this area right here, high of the day? Why not? I can totally see that happening. The other high would be the high from London session, which is also, well, much nearby, and so making it better probability, but easily reachable, I would say. All right, so that's gold. Let's take a look at other parts or other pairs. Okay, let me double check here. Okay. Let me send a message here to Remy in the background. Let's see, we are. Okay. Okay. All right. So the market reacting off of that order block on the 3 minute, just as that's why you want to have your targets there. If there's reason for you to think that the market isn't actually ready to push forward, or you're scalping and you don't want to be in the market too long, you're just gonna take it off at the first available area to get out, then that's why you want to have it. That would be a great area to have it because of that reason, right? You want to have it as quick as possible, be out of the market before the market actually starts coming back, or doing coming back and retracing perhaps the whole move it had, the whole reaction it had. Who knows? Let's take a look at EU to see if we have anything. Market is not coming back. Maybe we can take a look at the Dixie index as well. What do you guys say? Let me know in the chat to see what you are. This is the area that I would be interested in getting in, or some other new structure that could be created, right? If it does something like that, that perhaps it could be something else in the near future. But as time is passing by, we need to be realistic, because there's about 3 hours left to the market to come back, retrace, and possibly push out. And if it does that too slow, let's say it takes 3 hours or 4 hours to come back, then the likelihood that the market will reverse today and is not that great. Maybe it will do it through Asian session in London tomorrow, but that's not how I trade. So I don't want to be taking those trades. I want to be in and out before the end of the day, ideally, since we don't have a daily since we don't have a daily uh, uh, a daily signal. It is bank holiday today in the U.S. All the U.S. Financial institutions, it's bank holidays, so I don't trade the equities. I'm not sure if the equities are open, the equity markets. I think they're observing. I should check this in the background, whether or not our equity, the equities is open. Let me double check that. But it's bank holiday, so let's check that. Oh, all right. Okay, let's no, my after I've been on holidays for about 5 weeks, and every I don't know what's happening, but everything seems to be a little bit off today on my side, on my computer. Things do not want to work, and they seem to be, you know, uh, having some issues there in the background. I'll answer the question in a short while. Let's take a look at. Okay. The market is pushing forward toward that daily order block, and it seems like it's not coming back for that move. Yeah. So the the market is not looking to retest the entry order block on the 5 minute for that quasi. And indeed, it's bank holiday, so perhaps if you look at the range of today, it's not compressed at all, right? We had that gap down, and we are at 63 on the range, while the ATR um, is doing 49. So it's clearly already expanded. Now, 49 isn't a lot coming off from the holidays, but it's still quite compressed. And the you know the New York Stock Exchange being closed today on bank holidays tells us that the market will. I don't actually see it on EU on the forex. The forex market has been quite strong for today, especially if you consider that impulsive move. Now, normally by this time at the New York opens about a 13 minute, it should have opened normally if you weren't on a bank holiday. But so you could expect the market to have, perhaps a little pushback and then a continuation for the rest of the day. But that's not happening because the equity is being closed, and all the U.S. side of the market will not be participating on the market as much. So that New York Open with its sweeps and retracement today will likely not happen today. But even I think this even so, the testing of the previous high is well within the reach of the market, because it's not asking for a breakout and a continuation, just a retest of the high of the day. We still have plenty of time to do so. It looks like it doesn't even need that much time to reach it without the entry, right? The entry would have been when the market comes back and retests that area. On the 50-minute, you can see there's a quasi on the 50-minute as well. So you actually have multiple time frames indicating possible entry order blocks, and you'll have to wait and see the market which one of the two it uses, right? Sometimes it uses both of them. Sometimes it's clear on one time frame it only uses, let's say, the 5-minute or the 50-minute, and and not the other one. In that case, to me, that's the market telling us, okay, this is the time frame we should be looking, not the one that you impose, but the one that the market is telling us to use, right? What time frame does all these patterns happen? Clearly, where is it signaling us? And that's kind of the frequency, you know like old-fashioned radios. You have that dial, we have to tune in, dial in the frequency, to listen to what the other party is, the other side is trying to tell you, right? The radio station, in this case, it's the market. You got to dial in with precision at the right time frame that the market is trying to communicate to you, where the patterns are and how to read the message that is coming through. I like that analogy, by the way. Um, so yes, the U.S. stock market is closed today. Yes, Kapu Nguyen, it is closed. It's Martin Luther King being observed here, not here, there, in the U.S. Through some other, let's look at a dollar CAD. What do you guys say? Dollar CAD. That's a days. Very interesting for multiple reasons. That's the off of these levels. That's the monthly. Okay, that the market reacted off this order block. That's a beautiful reaction. On the on the weekly, we did not have a. Actually, we did have a weekly order block as well, which is this. See that market comes back and reacts off of it. On the daily time frame, we were still expecting price to come back to some structure on this pattern. Hasn't done that yet. Actually broke that daily order block. We need to expand this to the height of the area. That means that we can. There isn't any structure yet. This is the only one in around that. I mean, on this is the quasi. Let me pinpoint it for you guys. This is the quasi, and it is still in progress, right? And there isn't anything from the head all the way to the top of the pattern. There isn't anything beyond the 50% retracement other than this order block to be traded on this time frame, right? So on the daily time frame, we still need to wait for the market to reach this level, which is much lower. So we need to wait for that. There is a fresh order block here, bullish, that can be used. So we could look for areas, but it looks on the higher time frame that it wants to do, wants to break a structure and go lower. So we'll have to see. There is there. Let's take a look. The open is 80.06 or 38.80, and the close here is 38.80 also, but not above. All right, so there is no quasi in my traded. Otherwise, I would be looking for going long. The structure is lower, meaning this would be the H4 order block, but it's a reversal pattern that I would like to be using because it does not comply. This move, right, from here to here. Let me show you guys. Here to there, or even if you use the alternative rule from here to there, both of them are not strong enough for me, right? They're not indicating the left shoulder, because that's what I'm looking for, has been created there. If there's no left shoulder, then this couldn't be the head, and there is no quasi, meaning I would be, because it's not a quasi, I would not have anything to trade here. Going long, if anything, it would be a short. Let's take a look. It's a bullish order block, but it's not tradable, as I said, not to me in any case. Yeah, there's reason on lower time frames on the H1 and H2 to go long, but it doesn't have the H4, so I will just not touch it. If anything, maybe I can. Let's take a look. Do we have a reason? We don't have a reason to go short either on H4. So that means basically that I'll have to sit on my hands and wait for the market to signal me, which is right here. This is the low, the lowest point. All of these, that would be the quasi on the H2. And that leaves me, does it give us a entry short? It does not at this time. There's nothing above that 50% retracement that I would want to trade, but maybe that can change, and maybe in the future, as this goes lower, we would be left with perhaps this order block, maybe to trade short from. But definitely, that would be something like that to go much shorter. I mean, much lower. And that's very interesting. I'm still interested in market to come back to this structure. It hasn't left anything else, so that can still take a while, right? It can take still a while before we reach the structure above. But I want to be taking this long, um, because it has the monthly, it has the weekly reason, and it also has the daily reason for him. When you have these, monster of reversals patterns, all of them telling you the same thing, then you can target the daily structures. So you can split up the trade into maybe 2 3 targets, one being the daily target. That would be the weekly as well. Yeah, weekly and daily, and then you can have another one which would be at the monthly, basically. That is a monster of a trade, a monthly TP that would be able to catch from this area. Let's mark it. Right, so you could be getting in with a obviously, if you go to lower time frame, you can get in with perhaps a 10 pip or 15 pip. 15 is already a lot, but you sometimes it's that's the structure that it gives you, and you can target these levels on. You got to have patience though, because it's not going to travel this distance in a day or two. It's going to take, since it's a monthly target, it may take multiple weeks, and even a month or two to get there, right? But that's the area to be expected. This is the daily target, in my opinion, and the monthly target is just a little bit higher. You can still even consider hitting, having both of them, the daily and the weekly part of the partials, at the monthly target, but I would be a little bit, you know, a little bit too ambitious. I would just leave them, the daily at the daily target, and the weekly and or monthly to the monthly, right? Even if they're very tight to each other. Okay, so that's it. Dollar CAD doesn't offer us any opportunity right now. Nothing to go long from this area. If anything, it looks like we want to be going short this, because now it's the neckline, it's breaking it. I do want price to come back before I take the short, but it looks like price wants to break this structure, and if it does so, either it's gonna break and come back and touch the lower border of that order block to continue, or sometimes it might come back to something in that quasi pattern, and before going lower, and then that's the places you want to be interacting with the market for that short. Let's look at some other pairs. What do you guys want to be looking at? We still have about 5 minutes on our stream. Time flies away. Uh, let's take a look. Maybe we can take a look at the since it's all about the dollar index. Maybe we can take a look at do a little bit of a analysis on that on the Dixie. So we have the market containing we're holding up this range for some time, and now we are outside of it, meaning the dollar index being weaker as it broke down from the range we had. There isn't a lot here to say other than the market is trying to hold, not breaking even lower. You can see we had the bullish order block being created, and within that another bullish one, and we had a very clean, very technical reaction right here from the order block that was created, the market reacting off of it. But as you can see, it's not really getting traction for the follow-up movement. It can still happen. We don't know what the next bar will be, but it looks like we would want it. Actually, the monthly, this is the monthly time frame. So monthly, it hasn't closed yet. It can still close above the open of the first candle, the previous candle, and if it does, it would look more convincing that the market wants to continue higher. But if it closes like it is now, looks bullish, but not really that convincing. Okay, so we had a reaction of this monthly. On the weekly, we had a quasi. Look at that. A beautiful quasi that is actually in play. Look at this. Right here, that's the quasi. That's the break of the neckline. This is the neckline. This is the head, left shoulder. It breaks the neckline and it goes to where? Goes the order block that is the only order block below the 50% retracement, which is this. Yes, and that's where it wants, and that is where it had its reaction, right? And even with this beautiful retest of that order block, look at that, probably to the pipette, precise as it moves out. And okay, and it is using on the weekly time frame, using that block, right? This one, which is actually like so, as a support area, but that you want to take that into account. Let me clean that as well. All of these are from before, which is also part of the quasi. So this looks quite interesting for price to come back and then move out to the high of that structure. And what would this mean for EU? So that means dollar weakness for the next couple of areas, a couple of next weeks, until we get to this structure here, and then for market to be stronger. On EU, that would mean weakness. I mean, that would mean this area, right? If the dollar is weaker, it means that the market will likely go up for some weeks, and then have a market going, for EU dollar being stronger, right? That's the inverse reaction you expect on the Dixie price going on dollar being weaker, then to go up to hit perhaps the level on the 17th of November. And you can target that. What's the 17th of November? That's going to be these swing lows. That's where we can have our projected. So actually I had it a bit too much, something around here, 17th of November, right? So the market can expect this kind of a movement on if the Dixie is telling us the direction, then we can be targeting this area. Looking at just the order block, that is, but continuing on the daily, that was the weekly. The daily time frame, we did have a beautiful reaction off of that. Look at that. Quasi, this will be the left shoulder, the left shoulder neckline head, and then it comes back. It had two entry order blocks, and it reacted beautifully off of the first one. And this looks good. This actually looks very good. It's too early to say. Actually, this is perfectly fine to expect this, but actually, price continuing without a retrace also looks great, as because it's the weekly, right? It's the first day of the week, and the weekly hasn't. Okay, so that was the weekly. Yeah, the movement is already. We already had the beautiful reaction of the daily entry order block. And it comes back to retest the mitigate structures it leaves behind, and you have another structure there as well. Comes to us visually, and that's this not entry. It is an entry order block. Yes, it is actually an entry order block on the quasi, so we can mark it as such. And I would be interested in getting a reaction off of that into the levels above, right? That's the kind of a reaction that I would be looking for. It may not, but if it does come and hit it, then I wouldn't be going to the lower time frames to looking for trades. This is the Dixie, so that means that on the majors you want to be waiting for price to go, for EU, for example, to go a little bit higher to take that short. If you want to be pairing this, looking for alignment between the Dixie and EU, which you likely have, because the EU is the euro dollar is the biggest component in the Dixie index. So that would mean the order block that is created on the 5th and 6th of January. Let's see if that is also visible. That's this order block. So that means if you're using the Dixie as a indicator, you want to be waiting for a short of the dollar index as it hits this area, right? Which is the order block that corresponds to the same area. That means that it looks like the market would want to go short from, or go lower, reacting off of this order block, which is nicely the target we had as well for any trades we have as the market goes into the area, right? So you have a long trade going into the area, and then based off the Dixie, a short trade from that area. That's a beautiful opportunity right there for next couple of days, and we see that the target has been hit. We didn't actually get in the entry, didn't get the entry, but the target of the trade, the level has been reached for that setup that never had the entry. All right, we've come to the end. I hope you had a great time with me as I went through a couple of charts, couple of pairs on this bank holiday of the US. I would like to invite you for our Discord stream for this day, 19th of January. And I would like to thank you for being part of this stream and making this possible. All of this we do is because of you. So keep supporting us, um, liking the stream, subscribing to the channel, and coming into the Discord community to share some great, fun and good times with people just like you who love and trade for with a lot of passion. All right. So, on behalf of everyone at the Fivers, we wish you a wonderful day and see you tomorrow again. Bye bye.